Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help.
Yes.
So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Monday, October 5th, 2020. Carol Masser along with Jason Kelly, and I guess everything's all right in the world.
Yeah, I mean, if you were to look at the stock market and maybe you smartly went and just lived in a cave for the past few days, you would think nothing was going on.
Or the past 7 months.
Or the past 7 months, yeah, that's for sure. But, I mean, the roller coaster ride that really started late Thursday night and went through the weekend, all those political headlines.
Yeah.
But they have led to some optimism. The president's health does seem to be improving from what we're told, but also some optimism even from the president himself about stimulus, and that seems to be at least helping drive the trade here.
Yeah, absolutely, no doubt about it. We're going to get into all of this over the next few hours. First up, though, let's get a check on that trading day. Here is Charlie Pellet. Hi, Charlie.
Well, hello there. Happy Monday to you both. Do want to begin with a headline from the CDC. It says coronavirus can spread airborne indoors beyond 6 feet. So again, repeating the headline from the Bloomberg, also CDC saying the coronavirus can spread airborne indoors beyond 6 feet. We're looking at an up day here off session highs, but still an up day with the Dow, the S&P, and NASDAQ all advancing. Stocks close to an almost 3-week high on optimism over economic stimulus, and that President Trump may soon leave the hospital. Stay with Bloomberg for the very latest developments. Here's where we stand. S&P up now by 38, up 1.1%. We've got the Dow up 310, up 1.1%. NASDAQ up 167, up 1.5%. 10-year yield 0.74%. Gold up $13 the ounce, up 0.7%, 19.13. And West Texas Intermediate crude up 6.5%, now up $2.40 a barrel at $39.45. Recapping stocks higher. S&P up now by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to dig more into throughout the show what the CDC said, because even beyond the headlines that Charlie just mentioned, some interesting guidance. Of course, that guidance has been much debated, and we're told a lot going on behind the scenes there. So interesting to keep an eye on that. In the meantime, let's set the Business Week agenda. Gina Martin-Adams is with us, Chief Equity Strategist for Bloomberg Intelligence. She joins us from New Jersey, as does Dave Wilson, Stocks Editor for Bloomberg, also in the great state of New Jersey. I want to get to Gina in a second, but before we do that, and we're going to talk about this a couple times throughout the course of the show, Dave Wilson, I laid eyes on him via Nexi for the first time in a long time, in 6-7 months, because a group of us got together virtually to celebrate his 30th anniversary at Bloomberg.
Which is so incredible. It's such a WOA. Dave, congratulations. That's a big deal.
Thank you. I appreciate that.
Yeah. I mean, man, you've got those, how many blocks on your, on your desk at home or desk at work?
Those lucite blocks. It's like, it's
They're
towering.
On the desk at work, so I haven't seen them in 6.5 months, and I'm looking forward to the 4th block. And just so the audience knows, you get sort of a big sort of base when you get to 10 years at Bloomberg LP, and then you get another cube at 20, another one at 25, and then finally your tower, so to speak, tops out at 30 years. And by the way, each of the blocks is a different color. So
right.
It's really kind of cool.
And not many. Hold on a second. Tops out for now. For now, Dave Wilson. Come on.
Well, make it 35, Dave, and there's going to be another 5-year block.
There's going to be another block.
We're going to talk. We're going to talk to the powers that be about that. Make sure that happens. All right, let's set the Bloomberg Business Week agenda, because we've got Gina Martin-Adams also with us, Chief Equity Strategist at Bloomberg Intelligence, on the phone from New Jersey. And as we mentioned, Dave Wilson, our stocks editor. He's also here from New Jersey. You know, Gina, let's talk a little bit about this market trade, because we kidded at the top of the broadcast. Everything is okay. We've got a rally underway.
Yeah, everything's okay today. It wasn't okay Friday. It was okay Thursday. You know, I think it's a lot of back and forth. I feel like I'm playing ping pong the last couple of days. But in reality, the stock market's kind of gone nowhere. We've been really stuck around our 50-day moving average on the S&P 500 since the beginning of October, and I'm not sure we're going to get materially off of that moving average, considering all of the uncertainty that we're currently faced with. You know, until we get a fiscal package or get past the election, even getting past the election, will we have some resolution with the election? There's just a lot of uncertainty out there, so I think we're going to be somewhat range-bound. That said, the couple of things really stand out to us. The first is, really since the beginning of September, our sector strategy had said prepare for some rotation out of the COVID defensive stocks and into more cyclically oriented groups in the S&P 500. We do appear to be continuing to see that. Slowly but surely, tech stocks have sort of deflated from extreme overbought conditions and have now been trading somewhat sideways for the last couple of weeks, where we're starting to see some incremental improvement in some cyclical groups. So I think that's important to watch. The other thing is just, as much as we were focused on tech in September, there was an absolute rout in energy. I mean, even last week, all stocks were up, but energy stocks were down. The month of September, energy stocks tripled the losses for the tech sector. I mean, it's just been absolutely brutal. So I think you want to watch the energy sector pretty carefully, and it is actually experiencing a little bit of recovery today.
And so, Dave, as you look at some of the specific names, I mean, I look at the biggest mover in the S&P right now, and it is very much headline-driven, Regeneron.
Absolutely, because the company's COVID-19 cocktail was used on President Trump. And so, you know, you've got Cantor raising its rating on the stock. They're recommending the clients buy it for the first time in 2 years. You've got SVB Leerink talking about how the decision to use the cocktail on Trump was, quote, the ultimate validation for their therapy, which hasn't even gotten to the point where you can give it to people under an emergency use authorization from U.S. regulators, which is how a lot of the COVID-19 tests and treatments have been made available. Trump was able to get it to what they call a compassionate use. So, the idea is looking ahead. I mean, if you've got the president taking your drug, then maybe it's in a position where it'll actually move forward and more people will be able to do that. And Regeneron's really been trying to diversify its business. In any case, you look at their revenue, it's still primarily from their eye treatment, Eylea, which has been around for several years. So definitely being seen as a plus. And actually, since late Friday, when we found out from that White House physician that they had used Regeneron therapy, stock's been on the way up.
Yeah. Gina, what's the big thing you're looking at the balance of the week here?
I think I want to continue to watch for this rotation. Obviously, everyone's watching fiscal policy as well. So if we get some action on fiscal policy, I think that could be a trigger for a little bit of improved risk tolerance, at least in the short run for investors. But I think we want to watch really carefully as to where investors actually bid up stock prices in that environment. Does it go into COVID defensives, or do we start really banking on more of an economic recovery ensuing into 2021?
Big questions out there. All right, thank you so much. Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, on the phone from New Jersey. Dave Wilson, he'll be back with us a little later on with his chart and stock of the day. The anniversary man celebrating 30 years at Bloomberg. We'll talk more about that later on in the show. Let's do the Bloomberg Business Week bite of the day, if we can. Carol, one number that tells us a lot today is number 45,000.
Yeah, it's a nice round number. Cineworld Group saying today it will temporarily suspend operations at all of its American and British movie theaters. It's a move that could affect about 45,000 employees. It's the world's second biggest cinema chain. And it did say on Thursday it's closing its 536 Regal theaters in the U.S. and its 127 British locations, including the Picture House brand. So that's kind of a bummer. That's a big bummer.
It's a bummer. But you've seen all these movies pushed off into 2021. Most recently on Friday, I think, the James Bond movie.
Yeah, right. So then, these guys have no films to show. And actually, I don't feel like there's a lot of demand necessarily from people to actually go to theaters.
People are not rushing to the theaters. No. I love going to the movies. And I'm like, no, I'm good.
Yeah, I'm not going to do it. Listen, coming up, we got lots to cover. We're going to keep a close watch on the president, update on his condition, whether or not he is returning soon to the White House. We've also got Dr. Joel Bloom, president of NJ Institute of Technology, NJIT. So we'll talk to him about what they're doing, certainly to help their communities around them.
Yeah, I'm really excited. Poppy McDonald from USA Facts is going to be with us.
Yeah.
Fact checking, truth, fiction, obfuscation, all of it. We're getting used to it. Facts matter. Journalism matters too. All right, let's get down to Washington for some of those headlines from the nation's capital. Nancy Lyons is there. Hey, Nancy.
Hey, Jason. White House Chief of Staff Mark Meadows this morning was sounding like a hospitalized President Trump could be discharged as soon as today.
The president, in consultation with the doctors, will make a decision on whether to discharge him later today.
Meadows told Fox and Friends the president has made unbelievable progress in his recovery from coronavirus, but it's looking more like it'll be tomorrow for a release, according to people familiar with the matter. Another administration insider, White House Press Secretary Kayleigh McEnany, has tested positive. The Trump campaign has taken a hit in personnel and finances because of coronavirus. Bloomberg's Amy Morris has more from Washington.
President Trump has the virus. His campaign manager, party chairwoman, and high-ranking White House officials are all laid low with COVID-19. And the Trump campaign is short on cash and slipping in the polls after Tuesday's widely criticized debate performance. It is not clear if the president will be able to participate in the next two debates. Republican strategist Chris Wilson tells Bloomberg News the virus has slowed everything down, just as the race for the White House is speeding up. In Washington, I'm Amy Morris, Bloomberg Radio.
It's the first Monday in October, and that means the Supreme Court is beginning a new term without Justice Ruth Bader Ginsburg. One key issue this term will be the case concerning the Affordable Care Act, which is expected after the election. Republicans aim to eliminate the landmark health care law, while Democrats have warned killing it would end protections for millions of Americans. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser. And listen, we talk about it every day.
Yeah.
Schools.
Right.
Schools opening, not opening, hybrid. We have had a little bit of back and forth, but it seems like Governor Cuomo and Mayor de Blasio more or less on the same page here. Some New York City schools are going to close, specifically in some hot spots that have been identified. They basically narrowed it down to a relatively small handful of zip codes here, and that's what they're going off, basically the positivity rates when it comes to positive cases, positive tests, I should say, across those areas.
Well, and this goes back to tracing, right? Once you determine where a hotspot is, you've got to kind of shut it down, get it, control of it. So they plan to shut down private and public schools, indoor and outdoor dining, other non-essential businesses in 9 zip codes that have 14-day average positivity of greater than 3% when it comes to the virus. So 11 other zip codes where rates have remained between 2 and 3% would face closings of indoor dining, gyms, and pools. And they are not closing religious institutions, but these hotspots are where, that's what's really driving those overall numbers up, Jason, but they're really kind of, honing in on where those hotspots are and then just kind of shutting them down.
Yeah, and I have to say, here's a really important statistic. So not including the hotspots, those 20 zip codes, New York's, this is the state, positivity is 1.01%. That's pretty much where you want to be. That is the lowest in the nation, according to the governor of New York. Obviously, he's talking his own book a little bit. But the 20 zip codes, they have an average positivity of 5.5%.
Yeah, it's a big difference. And that's where you start to get worried, right? And we remember the numbers from March, April, May, where all of a sudden, a 3 or 4 or 5% becomes a much bigger rate, right? And that's when you start to get a little bit nervous about where it goes from there. And we already know it doesn't take much for all of a sudden the hospital and medical care systems to be strained, right?
Right, totally.
Yeah.
And it really is about, you're exactly right. It really is about, can a community handle this? We don't think it's all...
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are at an almost 3-week high on optimism over economic stimulus and that President Trump may soon leave the hospital. The S&P 500, NASDAQ, and Dow Jones Industrial Average all rebounding from Friday's swoon in the wake of Trump's coronavirus disclosure. Regeneron Pharmaceutical shares rallying after the president was given an experimental antibody treatment made by the drug maker. Regeneron shares, they are advancing now by 6.19%. Stocks higher, S&P up 42, a gain of 1.3%. The Dow up 339, up 1.2%. NASDAQ up 177 points. That's an advance of 1.6%. 10 years down 15.30 seconds. 10-year yield 0.75%. Gold up 0.7%, 19.13 the ounce. And West Texas Intermediate crude now up 6%, 39.29 a barrel. Dow Transport's up today by 1.5%. Recapping, S&P up 42, up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's check in with one of our pals, Dr. Joel Bloom, president of the New Jersey Institute of Technology, NJIT. We know it as. We've done a lot of fun broadcasts from there over the years, but it's a different world, that is for sure. Dr. Bloom joining us on the phone from Newark. So first of all, how are you? What are things like on campus? I know you started to welcome some students back last month.
Jason, things are going well on campus. We have about 2,000 students a day here. We've got about 1,300 in residence. And we're doing some converged learning. Some students are learning in classroom, while others are concurrently tuning in, and we are doing some remote learning. Our enrollment is held up very nicely. We're a little over 11,600 students this year in total, and we have been managing the virus, the spread, where I've got to be very careful what I say here, but we've had a total of 9 cases. So we test everything, the air, wastewater, and obviously individuals. So we've been able to manage the virus, deliver our education, open our labs, and open much of our campus. Thank you for asking. I hope you are well.
We're doing okay. You know, it's a remote world that we're living in, right, Carol?
Yeah, totally remote. I mean, and it sounds good that you've been able to at least get, like you said, you know, labs are open, get some students on campus, because we know that that is so crucial, Dr. Bloom, in terms of the learning experience. You can do stuff virtually, no doubt about it. We're doing a radio show, and I think we do it fairly well, you know, virtually, but nonetheless, there's nothing like that face-to-face, especially when it comes to academia.
And especially when it comes to the STEM disciplines, you know, the computer science, the engineering, architecture. It's almost unimaginable as to how you can teach students, and we know the challenges of these disciplines, only remotely. So while we have a predominance of freshmen and sophomores on campus, because they're the ones that are going to be most challenged to get into learning in blocks of 15 weeks, we also, again, have opened all of our labs for our juniors and seniors as well. It's that lab, hands-on experience, students working in teams, students doing the problem solving that makes this kind of education a real challenge to only be done online. Again, particularly at the undergraduate level and at the PhD research level.
And so, Dr. Bloom, you know, we get new guidance, it feels like, fairly frequently, and a big set of new guidance from the CDC today. Where do you take your cues from? Obviously, you are very well read in and very familiar with science at its core, but who are you looking toward more or less? Who has really come through for you in terms of, you feel like, providing the sort of information that is actionable and that you trust as you make some pretty big decisions around student and staff and faculty safety?
Well, here in Newark, we're very fortunate. We've got a number of hospitals. We have one on one corner of our campus, St. Michael's, and one a little further on the opposite corner, University Hospital. And they, in fact, are our health care providers, St. Michael's for our students and for our faculty and staff, university hospitals. They have outstanding epidemiologists, outstanding lab and lab access. So we have been relying on their expertise on the opposite corners of our campus to engage, to talk with, to test, and again, to keep us up to date. Very timely turnaround, if you will, on our testing and our test results. And we've used other consultants, again, particularly in the area of wastewater testing for our residence halls.
Can I just say, that is such a cool thing. Like, we have a great cover story in the magazine, you know, that's looking at the things, as we all wait for a vaccine, what else can be done kind of before that? And we talk about, you know, quick testing, where if we could all take a test every day and get an idea of whether or not we have the virus, if you could do that every day, every person, it would be much more easier to open up our economy. But wastewater, that has turned out to be something that it shows up early on if somebody has the virus.
It absolutely does. And we did have, we have we're using 5 of our residence halls. In one of them, one of our largest, one that has 300 students, we did get a positive sample. Again, that's perceived generally as a predictor. We quarantined all 300 students. We did now individual testing beyond the surveillance testing that we do of 400 individuals every week. And ultimately, we believe there was one case that we somewhat already knew about, that in that resident hall that was quarantined, that turned out to be the indicator. But the 280 plus students all tested negative. As they tested negative, we put them back into the flow of the regular student population. So again, it's being thoughtful, it's being prepared, it's being intentional, and it's being, in part, as you know, smart and lucky.
Mm-hmm. Right, absolutely. Yeah, it all factors in. All right, stick with us. We're going to continue our conversation with Dr. Joel Bloom, president of NJIT, joining us from Newark, obviously taking very specific steps to keep his team and his students safe. We know that higher education has been one of the most challenging front lines of all of this in terms of getting back to some semblance of normal life, Carol.
And doing it safely. And he talks about, you know, opening up the labs for juniors and seniors, anybody who's in kind of a STEM, science, you name it. Like, that's such a big part of the educational process, is being in the lab.
Sure.
And working on a team and working to learn about things in that particular, you know, way. All right, you're listening to Bloomberg Business Week. Carol Master, Jason Kelly. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we're going to continue our conversation with Dr. Joel Bloom over at NJIT. Want to talk to him about some of the specific programs that they're working on and how maybe some of this has changed even slightly the way that they're educating their students, what they're thinking about, what their students are saying back to them.
But good to hear that they've got people back on campus and they're moving ahead. All right, we'll get back to him in just a moment. Let's get back to your top business stories. Also check on that trading day. Here's once again Charlie Pellet.
Hi, thank you very much. And U.S. stocks are trading close to session highs right now with the S&P up 44, a gain of 1.3%. I'll give you the numbers. The story in a moment here. The Dow's up 355, up 1.3%. NASDAQ up 180. That is a gain of 1.6%. 10-year down 16.30 seconds. 10-year yield now 0.75%. Gold is up $14 the ounce, up 0.8%, 19.14. And West Texas Intermediate crude up 5.7%, $39.15 a barrel now on WTI. U.S. stocks close to a 3-week high on optimism over economic stimulus and that President Trump may leave the hospital soon. Treasury yields, as I mentioned, jumping. The dollar is weakening. Bristol Myers Squibb buying Myocardia for $13.1 billion in cash in a deal to expand its offering of heart drugs. Bristol Myers, little changed, up 0.3%, but Myocardia is surging now by 58%. Regeneron Pharmaceuticals climbing the most in almost 7 months after President Trump got the biotech company's antibody cocktail to treat COVID-19. Regeneron shares up now by 6%. Well, President Trump does remain hospitalized at the Walter Reed National Military Medical Center. We will be getting an update shortly on his condition, but lots of questions today about the severity of his illness based on the treatments that have been disclosed by doctors. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
If in fact he got steroids and the antibody treatment and remdesivir, his physicians were quite worried about him, and they really threw a lot of stuff at him because particularly steroids are for pretty severely affected individuals. So I think there's reason to be concerned until we really know that he's out of the woods, and it's probably going to be a few more days to know that for sure. I don't know if you can rely on what's being said.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping stocks higher, S&P up 44 points, up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great to still have with us Dr. Joel Bloom. He's president of NJIT, New Jersey Institute of Technology, with us from their campus in Newark, New Jersey. So, Dr. Bloom, I do wonder, with so many people on campus, I do wonder, too, about how you do impose restrictions about what everyone does. And I bring it up considering the last week, and we saw out of Washington, the last couple of weeks, whether it is for a Supreme Court nomination, we saw people gathered even in an open setting, and yet we are now realizing, or whether it's on the campaign, realizing how these things can be problematic and cause those virus numbers to go higher. How do you basically keep college students under control?
Well, we have outstanding students. They're smart. They're receiving STEM education. They know what their future looks like, and why would they jeopardize it by either violating what we've asked them to follow, which is remain masked, remain socially distant. We have a pledge that every time they open up their computer or their devices, that they have to pledge they've done the following and followed the rules, including hand washing, etc. So our students have been very, very compliant. Again, I think it has to do with their intelligence, their drive, what they want to achieve, and they see what's at the end of this education, 3 and 4 job offers, and very often they will be working in the professions that are going to help not only this economy, but help treat and prevent future pandemics. These are our science, technology, engineering, mathematicians, and we know we are in the tech economy. Every company is a tech company today. So I think they see the vision. They're smart. They understand what they need to do. And again, they are following the rules. And again, we are very fortunate.
And Dr. Bloom, along those lines, I mean, I have to say, having spent some time on your campus and having spent some time with you and a lot of your students and faculty, there is a sort of sense of purpose and a sense of mission that I feel like sometimes, candidly, as we look across the higher education landscape, maybe doesn't exist across the board. And it does feel like we are at this moment of, it's almost like this existential inflection point, right, for higher education, where people are asking a lot of big questions about why should I go, where should I go, what am I going to get out of it? What do you do as someone who's ultimately responsible for this institution to ensure that you're essentially continuing to be a step ahead of that debate?
Well, first and foremost, we lead by example. The example of our alumni, what they are doing professionally, how they are succeeding. The example of the companies that come to campus that recruit here. We could just go up and down the alphabet, from Alphabet to Amazon to Apple to Microsoft. So they come here with a strong sense of conviction. Again, a predominant student coming to NJIT is middle to lower income, very often economically at the bottom quintile of family income. So again, they are very often self-motivated. We constantly keep them in a context in which they are mentored. They get an opportunity to apply early on what they are learning. That comes back to what Carol was mentioning about the lab environment. We have them work in teams. We have them in front of faculty who make the theoretical very applied and make it very real. So see the goal of employment, how they contribute, how they can improve the quality of life. They see the research that's going on here. We've got some of the NSF money to do rapid research in the environmental spread of the COVID-19 virus. So it's all very real. It's very applied, very hungry, very motivated students. And again, we try to lead by example of what our alums have achieved, the companies that we partner with, and how they can be innovators, entrepreneurs, and have a very significant impact in the careers and in the professions that they choose.
All right, we're going to have to leave it there. Dr. Joel Bloom, we always enjoy time with you, president of the New Jersey Institute of Technology, on the phone from Newark, New Jersey. Was it Lonsdale that we talked to, Palantir, about the need for more engineers, right? We were talking
fewer
about
lawyers, more engineers.
Yeah, fewer lawyers, more engineers.
The world would be better with more engineers.
It's a T-shirt.
Yeah, totally,
It
totally.
would sell out in a heartbeat.
It would, especially at NJIT, because we've seen them. And I do think that, you know, that sense of purpose is real, you know, that he's basically like, look, these guys aren't going to mess this up.
Right, they get it.
They get it.
Right, they understand, right, the dangers in place if you don't kind of do the right thing. All right, let's get another check on world and national news headlines. Over to Nancy Lyons. We go in our D.C. studio. Hey, Nance.
Hey, Carol. Just moments ago, President Trump tweeted that he will be leaving Walter Reed Military Medical Center at 6:30 p.m. today, Wall Street time. A news conference is planned in about 20 minutes. Trump is coming under fire for a drive-by appearance outside Walter Reed yesterday. Dr. James Phillips is an attending physician and at Walter Reed and chief of disaster medicine at George Washington University. He tells the Today Show the move put the Secret Services at risk and sets a bad example.
This was a dangerous move. There is no medical benefit for this to have taken place. It violates CDC guidelines that come from the president's own administration.
There's now a new member of President Trump's inner circle who's tested positive for coronavirus. White House Press Secretary Kayleigh McEnany says she now has the illness, even though she says she is exhibiting no symptoms. The World Health Organization is warning difficult times are still ahead in dealing with the virus. Dr. Michael Ryan is the head of emergencies for the organization's Global Health Group. He says a large segment of the population has already been affected.
Our current best estimates tell us that about 10% of the global population may have been infected by this virus.
The estimate, which would amount to more than 760 million people based on the current world population of about 7.6 billion. That far outstrips the number of confirmed cases, which is more than 35 million worldwide. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. And, man, this is an Amanda Gordon blockbuster. Talk about schools, talk about Manhattan, talk about, I'll just say it, rich folks and schools in Manhattan. It's all here. It's all here, Carol.
It could be on Billions. It could have been in Bonfire of the Vanities years ago. It's just like this whole idea. So a group of parents at one of New York's toniest private schools, tuition runs more than $54,000 a year. So they're kind of unhappy about the quality of their children's education during the pandemic. We are talking about...
Can we stop on one second? What? $54,000 a year.
How long have you been living in this area?
I know.
Come on.
Still.
You wrote a book about private. You wrote 2 books about private equity.
It's still a huge.
You
amount
understand
of money.
this area. I know.
For our listeners who are outside of New York City, that I think
they just fell off their chairs.
Yeah.
They're like, what?
Yeah.
Don't you have public schools where it costs nothing?
Yeah. Yeah. In any case, go on.
So we're talking about the Dalton School. They have some very prominent alumni. Claire Danes, the actress, Anderson Cooper over at CNN and CBS 60 Minutes. So they broke with many of the city's private schools in going with all digital instruction until at least mid-year. Because I have to say, of these types of schools, private schools, where you are paying more than $50,000 or $60,000 a year, there's been a mix in terms of the approach. A lot of them have hybrids and so on. So now, after weeks of watching their kids stream in and out of other private school buildings and the city's public schools getting back to work, some Dalton parents are calling for kids to get off their computers and back in the classroom. They're frustrated.
Yeah, because we all know that the online learning environment is not exactly equal.
Well, what am I paying for, though, if my kid is sitting at home in front of a computer?
Right. I mean, part of the argument is, the best teachers, the best instruction, et cetera. But listen, I think it's going to be an argument that we can continue to have. I do like it when you remind me, where are you from? Are you new? Are you new here? Are you around here?
Are you new to this? Anyway, it's a great read. We'll put it out.
And one of the most
Twitter.
read on the Bloomberg, not surprisingly.
We'll put it out. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating our earlier headline. President Trump says he will leave the hospital at 6:30 tonight, Wall Street time. We've got a briefing coming up at 3 p.m. We will have it for you live right here on Bloomberg Radio. And this additional headline from the Bloomberg Professional Service, the Engie board has accepted Veolia's offer to buy a stake in Suez. Suez is in the business of providing equipment and services for water supply and waste collection. Stocks climbing to an almost 3-week high on optimism over economic stimulus, also that President Trump will be leaving the hospital shortly. The Dow, the S&P, and NASDAQ all rebounding from Friday's swoon. Here's where we stand. The S&P 500 index up now by 46 points, up 1.4%. The Dow up 362, up 1.3%. NASDAQ up 192, up by 1.7%. 10 years down 16/30 seconds with a yield of 0.75%. Gold is up 0.8%, $19.14 the ounce, up by more than $14 the ounce. And West Texas Intermediate crude now up 6.1%, $39.31 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser, and among the celebrities, by the way, Carol, who showed up at Dave Wilson's 30th anniversary little virtual gathering earlier, Mike Regan, of course.
Of course.
Paying homage, paying his respects to the GOAT when it comes to
Market
the markets
bro.
coverage. Exactly. He, of course, is one of the senior editors looking after our markets coverage. He's got a great story that I read this weekend about what the markets were looking at ahead of last Friday and then everything that ensued. And that's been quite a doozy, to say the least, and to use a technical market term. Joel Weber also joins us, the editor of Bloomberg Business Week. So this, Joel, I have to say, as I often do, hats off to you, because this was one of these stories that I knew I wanted to read, and then I woke up Saturday morning and there it was. So thank you.
Yeah, you can give me no credit for that. It goes all to Mike, who I think, we had tasked sort of with earlier in the week. He was planning on doing a story that was sort of future-minded, and then basically the biggest news event of the year, which is hard to believe.
Which
I
is
can
saying
actually say
something.
That, but yeah, exactly. And it happened. So he basically had to sort of rework everything, starting on Friday morning. But I think the thing that makes it the story that it is ultimately about how the markets are trying to anticipate these next few weeks ahead of the election. And the thing that I found was so interesting, and the thing that I'll hope that he'll talk about a little bit here, is this idea of just how much of this was already kind of baked in, and that's sort of built into today's pop, if you will. So, Mike, why don't you talk a little bit about that?
Yeah, Joel, thanks. Thanks for having me on, guys. Dave Wilson, I don't know if I was a celebrity, but he was one of the guys who interviewed me in my first job interview at Bloomberg. So
love that.
Felt obliged to show up for that. Happy anniversary, Dave. He's one of the legends of the newsroom. But so this story looked a lot at the implied volatility in the market through the lens of VIX futures. And if you're not familiar with what that is, it basically treated as insurance policies against a drop in stocks. And you can buy VIX futures all the way out to, say, June of next year. And the way it usually works is those far out in the future contracts are usually more expensive because, you're kind of buying a longer-term insurance policy, and, you're protecting against swings in the market between now and June, as opposed to, say, if you buy one that expires in October, you're only protected through the life of that futures contract. But what's been interesting all year is that those are October contracts, which the way the VIX is set up, they actually reflect the implied volatility through November. They've been the most, at least more expensive than the others contracts around them all year. And the traders call it a kink in the VIX curve because it's not really what you normally see when you chart them all out on a graph or a curve. What's gotten even more fascinating is that October, November, and December futures are all elevated. So you have the shape of the VIX curve is not what it normally is. You have the most expensive VIX futures right near the front of the curve. So in other words, protecting against volatility through the end of the year. And what everyone is basically attributing that to is concern that there will be a big legal fight over the results of the election and possibly even, not to get too dramatic, but even a constitutional crisis if President Trump, as he has indicated, does not accept the results of the election. Then you add on top of that this new twist in the story.
Well, wait a minute, Mike. That's where I wanted to jump in. All right, we talk about, especially in presidential election years, we talk about October surprises. We've had actually several. So I'm guessing it was not completely a surprise when you probably got the call from Joel that said, "Hey, we've got this thing called the president's got the virus. So we've got to think of, maybe potentially rethink your story." Like, how does that impact what you just kind of laid out for us?
Well, I think everyone scrambled to sort of wrap their heads around the various possible scenarios in which it could affect volatility. I think one of the more interesting ones to me is that obviously Biden's lead in the polls has widened pretty significantly since the debate. And I think a lot of people expect it to continue to widen because of President Trump getting sick, this outbreak among his staffers at the White House, sort of reinforcing the idea that he didn't take the virus seriously enough, wasn't taking enough precautions. At least that's the impression. Who knows where he got it and if it was avoidable, but that certainly is the impression. So with Biden sort of taking a more commanding lead in the polls, a lot of people are saying, well, this sort of reduces the potential and the possibility for a contested election, because if he is further out ahead, the avenues to challenge it diminish somewhat. So that removes some of the concern about volatility for the rest of the year that was motivated by worries about a contested election. And if you look at the VIX futures now today, they're all down across the board, but especially those October, November, December contracts are all down pretty significantly. So, I think there's some truth to that angle of the story, that opinion from people in the markets that as Biden's poll lead widens, it reduces that worry and anxiety about a contested election between November and January.
Mike, do you get a sense of what, if anything, is fundamentally changed by all of this drama? And by drama, I mean the election and the pandemic and everything. Like, are there structural things or even almost like sentimental things that have changed about this market owing to all of this?
Well, obviously you saw this tremendous hit to sentiment early on in the spread of the virus, and then it was counteracted by this aggressive response from the Federal Reserve and Congress. So, sentiment's a fragile thing. One of the big concerns, obviously, now is will Congress finally get together and agree on a stimulus package? And that's another angle of the Trump getting sick story, is that people think it will sort of, a slap in the face to Congress, how a reminder of how serious this virus is and how there are still a lot of individuals, companies, municipalities, and states that have kind of been left behind and not really helped by the previous stimulus, and more is needed. So I think that is another sort of market reaction to the diagnosis.
All right, Mike Regan, you're the best. Thank you so much. Check out his story. Markets were already braced for chaos. Then came the diagnosis. Check it out at Bloomberg.com and, of course, on the Bloomberg terminal. Carol.
There's one strategist that wraps up the piece, and it says, this is over Barings, we are truly in uncharted territory, and if a week is a lifetime in politics, we have at least 5 lifetimes between now and Election Day. I mean, that's the point. Like, who would have thought what happened last week happened, and it did.
It did. Big time. It's Craig. For those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg This Week continues right here. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Monday. Stocks are higher across the board, in fact, at a 3-week high. And we are awaiting an update on President Trump's condition at the Walter Reed Medical Center. We will take you there live shortly. Stocks are advancing on optimism over economic stimulus and on President Trump leaving the hospital later today. Treasury yields are jumping. The dollar is weakening. The S&P 500 index, NASDAQ, and the Dow Jones Industrial Average are all rebounding from yesterday's swoon in the wake of Trump's coronavirus disclosure. Here's where we stand. The S&P 500 index up now by 52 points, up 1.6%. The Dow up 401 points, best level of the day now, up 1.5%. NASDAQ is up 224 points, up by 2%. The 10-year down 17/30 seconds, 10-year yield 0.75%. Gold up 0.7%, 19.13 the ounce, and West Texas Intermediate crude up 6.1%, 39.30 right now for a barrel of West Texas Intermediate crude oil. So it is an update on Wall Street. Chicago Fed President Charlie Evans says the U.S. economy is recovering, but still has a long way to go. And in an interview with Bloomberg Television and Radio this morning, Evans also said fiscal support would be, quote, extraordinarily welcome. And he had this to say about the outlook for employment.
I think we're trying to figure out where the labor market is going to settle out, how much improvement we're going to get in terms of, bouncing back from when we were closed down, and how much recessionary dynamics we're still going to be faced with sometime in the spring of next year.
AirAsia Group will cease operations in Japan immediately as it tries to reduce cash burn amid the coronavirus outbreak that has wiped out travel demand globally. AirAsia Japan has stopped all operations effective today. Among the U.S. carriers, for the most part, an update today as they await stimulus. We have got UAL, United up by 0.9%. American Airlines Group up 0.9%. Delta up 0.9%, but Southwest trading lower, down by 0.8%. Stocks higher, S&P up 1.5%. Charlie Pellet, Bloomberg Radio.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics. We should tell you we are awaiting some comments from Washington, a briefing from the president's doctors. Again, just reiterating what you heard from Charlie just there. The president has tweeted that he will be going back to the White House around 6:30 p.m. Wall Street time today. We will take you to Walter Reed for that briefing when it starts. In the meantime, you just heard from Chicago Fed President Charles Evans. He was on Bloomberg earlier today. Let's talk about that and so much more in the world of economics with our pal Steve Matthews. He's down in Atlanta, economics reporter, of course. He's been following all the Fed speak, also has such a great eye on both the national and the regional economy. Steve, really nice to have you with us. So put what President Evans and the other Fed speakers have said in some context for us, because you may have noticed it's kind of a wacky world out there right now.
Yeah, it is, and good to be with you, Jason. It's really interesting. Charlie Evans is very much an important player in the Federal Reserve. If you remember, a number of years ago, they had the so-called Evans rule, in which they set benchmarks for unemployment, and they said we're not going to lift off on interest rates until unemployment reaches a certain level. I think it was like 5.5% or 6%, and then they adjusted it once or twice. He is somebody who is a central thinker at the Fed, and he is basically saying, there was some disappointment with the monthly jobs number. Yes, the economy has done better than expected since it hit a low in April, but the outlook now doesn't look all that great, and they're very hopeful for more fiscal stimulus, but you have kind of a dual, a two-speed economy. On the one hand, you're having people who have been furloughed, from restaurants or from some other jobs go back to work. But now you're getting permanent layoffs. I mean, such as the Regal Cinemas today, the airlines. So it seems like we could be moving toward a more traditional recession, and the Fed has a high degree of uncertainty.
I feel like, is this like lava slowly moving, and we're just once again watching
Fed lava.
Fed lava, or COVID lava?
That was the name of Steve Matthews' band in college, Fed lava.
But no, I'm thinking more like COVID lava. Like, we're watching its impact on the economy. We get it. We understand. And yet it continues to progress slowly, impacting us unless we put an end to it, Steve.
Yeah, Carol, that's exactly right. And in fact, we're going to hear from Jay Powell, the chairman of the Fed, tomorrow. And what he has said in his speeches, as well as some others, is you've got to think about the economic response in three legs. One is the healthcare response, two is fiscal response, and three is monetary policy. In other words, he's saying in a nice way, if the economy is not really roaring back, don't blame us. It's not our fault. I mean, he's not saying it quite so bluntly, but basically, until you get the healthcare response right, until that is dealt with more firmly, until you get some kind of fiscal policy, you're going to have some lagging in not necessarily the firmest recovery.
And the ball, and right, the rock goes much more quickly downhill than it does uphill.
It sure does. I mean, we saw, really the sharpest recession in history, at least since the NBR has been keeping track in March and April. And now, the initial move back up was V-shaped, but is now very much kind of turned into a swoosh or just kind of leveling out.
And so, Steve, one of the things we rely on you for, and I've literally relied on you for almost 2 decades now, is a clear window into the economy there in the Southeast, which we know is a complex economy, but also really important and an amazing indicator of what's going on through the rest of the country because of the fast growth there in the Sun Belt and some of the most notable sort of demographic and economic shifts that are going on in the country. What does it look like right now? I mean, I know you're in touch with Raphael Bostic and his team all the time. Like, what are you seeing across the Southeast right now?
Well, you're still seeing things are opening up. Schools are back. You're seeing some momentum. But at the same time, it's like Delta Airlines is a big employer here. They're running, a third of the flights that they were running beforehand. You see lots of restaurants, even in Atlanta and throughout the Southeast, where they're just doing takeout. And, the hiring is not come back. And there are struggling small businesses. And in fact, one of the things that, Raphael Bostic has said, as well as Charles Evans today, is there are a lot of small businesses that are just kind of holding on by a thread. And the Fed has lending powers, but a lot of these businesses don't really need loans. They need grants.
Right.
And so it's a different situation, a difficult situation.
The lending, not spending tour of 2020, right, Karen?
Fed lava. Fed lava.
And talking about the Southeast and what's important here with college football,
it
was reported today that Bobby Bowden, the FSU coach, legendary coach, has COVID. And it's like, wow, I mean, that's terrible in a personal way, but it's also kind of something that's going to hit Florida and the Southeast hard.
Yeah, well, and just this whole idea, and Steve, I know you've been watching this. We've been talking about it on our Business of Sports show a ton, that, you start to think about these different economic engines in different parts of the country. And, the stat that I heard that you've probably heard as well, you probably reported it, I'm probably quoting you back to you, is that in Tuscaloosa, Alabama, the economic impact of a single University of Alabama football game is $20 million. And you sort of times that by 5 or 6 over the course of a season.
There are a ton of small college towns like Tuscaloosa and Clemson and Tallahassee and Auburn, where they depend heavily on just thousands of people moving in over a weekend. And it's like now, if they're having fans at all, they're having 20% of the fans. And it's making a huge difference. I mean, it's hard for these restaurants and hotels to survive through all that.
Yeah, absolutely. You know what? This is why I love Steve Matthews, because he goes from, the most arcane Fed
He's
speak.
He's a Renaissance man.
He is a Renaissance man.
Let's just go for it.
Exactly. I like that he got Clemson in there because he's a proud Clemson alum. Steve Matthews, economics reporter, our great friend at Bloomberg down in our Atlanta bureau. Really good to catch up with him, Carol.
All right. We're going to get another check on world and national news headlines. For that, let's bring in Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Hey, Carol. President Trump says he will leave Walter Reed Military Medical Center at 6:30 tonight Wall Street time and continue his recovery at the White House. He tweets he's feeling really good, even better than he felt 20 years ago. He also says, don't be afraid of COVID and don't let it dominate your life. We are waiting on a news conference, a news briefing at Walter Reed Military Medical Center. While the president and his doctors are seeking to minimize the severity of his COVID, that view has been called into question by medical experts. Bloomberg's Irv Chapman reports from Washington.
The medication the president has received offers clues into his condition, Dr. Joshua Sharfstein of Johns Hopkins said in a Bloomberg interview.
His physicians were quite worried about him. They really threw a lot of stuff at him because particularly steroids are for pretty severely affected individuals. So there's reason to be concerned until we really know that he's out of the woods. And it's probably going to be a few more days to know that for sure.
Sharfstein said events in crowded conditions, particularly indoors without the use of face masks, are just what the coronavirus ordered. In Washington, Irv Chapman, Bloomberg Radio.
We also learned today White House Press Secretary Kayleigh McEnany announced that she has tested positive for the virus and is entering quarantine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg. Back to you, Carol and Jason.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. It's interesting to sort of look at what people are reading today because, spoiler alert, they're just reading about the president. I mean, we go down the list of most read. I mean, it's pretty unbelievable.
Yeah, and exactly. And a lot about, of course, the president and his health. Let's take you to Walter Reed Medical Center in Bethesda, Maryland, for an update on the president.
For being here. Over the past 24 hours, the president has continued to improve. He's met or exceeded all standard hospital discharge criteria. He'll receive another dose of remdesivir here today, and then we plan to get him home. It's been more than 72 hours since his last fever. Oxygen levels, including ambulatory saturations and his work of breathing, are all normal. Though he may not entirely be out of the woods yet, the team and I agree that all our evaluations, and most importantly, his clinical status, support the president's safe return home, where he'll be surrounded by world-class medical care 24/7. I'd like to bring Dr. Dooley up to review some more specifics.
Good afternoon. Just a brief update this morning. As Dr. Connolly mentioned, the president continues to do very well. His vital signs this morning were notable for a temperature of 98.1. His blood pressure was 134/78. A respiratory rate of 17 respirations per minute. His heart rate was 68 beats per minute. And his last oxyhemoglobin saturation was 97% on room air. He currently does not endorse any respiratory complaints. And aside from our evaluation with the multidisciplinary team this morning, has maintained a full schedule, ambulating and working on the White House medical unit. I'll now turn it over to Dr. Garibaldi to again discuss therapeutics. Thanks.
Hi, good afternoon. And again, I just wanted to echo the sentiment of what an honor it is to be part of this wonderful team here at Walter Reed. Yesterday evening, the president received his third dose of remdesivir. He tolerated that infusion without difficulty, and his kidney and liver function continued to be normal. Our plan is to give the fourth dose of remdesivir this evening before he goes back to the White House, and we've made arrangements to deliver the fifth and final dose of his treatment course at the White House tomorrow evening. He continues on dexamethasone, and again, the plan for today is to continue to be up and out of bed, eat and drink, and work as he is able. And I'd like to turn it over to Dr. Jason Blaylock, who's an infectious disease specialist and the chief of medicine here at Walter Reed, to give some updates on infection control. Thank you.
Good afternoon, everyone. First of all, I just want to say what an honor it's been to be part of this medical team behind me and to care for the president. Since the president's arrival at Walter Reed, he's received medical management that remains in line with national clinical societal guidelines for treatment of COVID-19 infection. In addition, both myself and Dr. Wes Campbell have worked very closely with various laboratories in the area, state-of-the-art facilities to include USAMRIID and RARE on obtaining advanced diagnostic testing to really inform the White House medical team of both the status of the president as well as his ability to transmit virus to others. Also, we have worked very closely with the Walter Reed team to ensure that we are looking very closely at infection control prevention strategies and the right posture so that the president can safely return to his residence. And with that, I'm going to turn it over to Dr. Conley, who will answer any final questions.
Thanks, Jason. I mentioned it Saturday, but I'd like to reiterate myself just how grateful the President and I are to the men and women of Walter Reed, our colleagues at Johns Hopkins, as well as the many federal, private institutions that we receive support from. And so long as everything continues on the track that we're experiencing right now, this time, as the President already tweeted out, is to get him home later today. With that, I'll take a couple questions.
Be discharged back to the White House when he was given steroids. You've said that he's still on those steroids. Those are medicines, as you know, that are usually given to COVID patients who are on ventilators or with low oxygen. So did you over-treat him? And if he's still on that medication, how is it safe for him to return to the White House?
So we send patients home with medications all the time. In fact, yesterday afternoon, he probably met most of his discharge requirements safely from the hospital. And he's returning to a facility, the White House Medical Unit, that's staffed 24/7, top-notch physicians, nurses, PAs, logisticians, and the unit here, the team here behind me is going to continue to support us in that nature. Yes?
What infection control measures are you taking? And how was it safe for him to drive around in a cloth mask yesterday? And how is it safe for him now to return to the White House where there have been so many cases? How's any of this safe?
So the president has been surrounded by medical and security staff for days wearing full PPE. And yesterday, the U.S. Secret Service agents were in that same level of PPE for a very short period of time. We've worked with our infectious disease experts to make some recommendations for how to keep everything safe down at the White House for the president and those around him. We're looking at where he's going to be able to carry out his duties, office space, and I'll just say that it's in line with everything we've been doing upstairs for the last several days.
Can you tell us, please, on testing, can you tell us when he had his last negative test? Was it Thursday? Was it Wednesday? When do you remember when he had his last negative test?
I don't want to go backwards.
Contact tracing for people who are around him to know
I understand. The
when
contact tracing, as I understand it, is being done. I'm not involved in that. So.
Why did you begin the declaration that he leave, or was this something he pushed for?
No. So we try to get patients home and out of the hospital as quickly as is safe and reasonable. Every day a patient stays in the hospital unnecessarily is a risk to themselves. And right now there's nothing that's being done upstairs here that we can't safely conduct down home.
You said that 7 to 10 days was a window that you'd be concerned about. I don't think we're there yet. So do you have concerns about potential worsening or reversal, and what are your plans for addressing that if it were to happen?
You're absolutely right, and that's why we all remain cautiously optimistic and on guard because we're in a bit of uncharted territory when it comes to a patient that received the therapies he has so early in the course. So we're looking to this weekend. If we can get through to Monday with him remaining the same or improving, better yet, then we will all take that final deep sigh of relief. But as I said, 24/7 world-class medical care surrounding him down there. We're not going to miss anything that we would have caught up here.
Physically going to be in the White House, and what does that look like? How do you keep him safely quarantined?
I wish I could go into that more, but I just can't.
Doctor, why did you begin dexamethasone treatment?
So that has something to do. Yesterday we talked about that, the several little temporary drops in his oxygen, and we had discussed that as a team and elected to start it early in case that persisted or worsened, the potential risks and side effects we all discussed. We looked at the data and decided that we'd rather, push ahead on it than hold and risk, the opposite.
What about CT scans and chest X-rays? What have you seen on his campaigning?
As far as travel goes, we'll see.
His mental status, can you talk to about whether he has any neurological symptoms? Does he have any side effects from his medications? Any fogginess from the virus?
No, I think you've seen the videos and now the tweets, and you'll see him shortly. He's back. Yeah.
Pneumonia or any inflammation in his lungs at all?
So we've done routine standard imaging. I'm just not at liberty to discuss.
Doctor,
So you're actively not telling us what those lung scans showed, just to be clear.
So there are HIPAA rules and regulations that restrict me in sharing certain things for his safety and his own health and reasons.
Share how many times, you said his oxygen dropped several times. Can you share how many times he was on oxygen? You said you checked with the nursing staff yesterday?
Yes. So he the 2 episodes like we talked about yesterday, and both times that he received a little bit of oxygen and recovered immediately.
Was that oxygen required?
No, it wasn't required. He wasn't short of breath. He wasn't looking ill. It was more of us trying to anticipate needs and see how he'd respond. And in both cases, it came right off. He didn't need it from very long at all.
You were on board Air Force One for multiple trips. Are you at all concerned about your own exposure and exposure to the medical team?
I am concerned, but as the CDC says, there are caveats for essential employees. That as long as you continue to test negative, you remain symptom-free, and you keep a mask on when you're out and about, which we do inside the hospital 24/7, then you can carry on your duties. Yeah.
The president's an impatient man. Has he been itchy to get out of here?
The president has been a phenomenal patient during his stay here, and he's been working hand in glove with us and the team. And today it got to the point he's holding court with those of us around him, the whole team, going over all the specifics, the testing, what the future is. And we have been back and forth on what's safe and what's reasonable, and he has never once pushed us to do anything that was beyond safe and reasonable practice that we all first wanted.
The medical team who recommended against the president leaving here and going back to the White House today?
No.
The president said don't be afraid of COVID. Do you agree with that? Should we not be afraid?
I'm not going to get into what the president says.
His heart, liver, and kidney function was normal or improving. Improving, does that mean that there were effects, and is it all normal? Like, what's up with that?
Yeah, it's all normal right now. I would say he appeared to be a little dehydrated Friday. He was able to just drink and recover from that, and yeah, everything looks great.
Campaigning out in the country, what sort of things do you?
Yeah, so the big first thing that we need to do is that there is no evidence of live virus still present that he could possibly transmit to others. And that's what the infectious disease experts and some of our partners, military civilian entities, doing some of these advanced diagnostics just to see as soon as we can identify that. Routinely, we talk about a 10-day window, CDC guidelines, but we're checking him more routinely than just waiting 10 days. There's a possibility it's earlier than that. There's a chance that it's a little bit later, but we will know as soon as possible. And then we will look at him clinically. How are you feeling? How are you doing?
Why have you decided not to administer hydroxychloroquine to the president during his time here?
I'm not going to go into all of our debates about specific medicines and therapies. There are dozens of therapies that we were made aware of, that we considered, that we discussed and debated and looked at, the existing literature on. And this is the regimen we chose.
Hydroxychloroquine. In terms of COVID, is he having some of the muscle aches? Has he lost his sense of taste and smell?
No, we were just talking about that, what symptoms he has left. And he even the slight cough that he used to have, he doesn't really complain of at all. He hasn't ever complained of muscle aches. Yeah, he's up and back to his old self predominantly.
Next Monday, just to be clear, how long will he still be actively shedding the virus?
So this morning, I believe there was even an accounting by Dr. Fauci referencing a 5-day, the first 5 days of illness that people are most likely to shed live virus. There's a reason there's the 10 days is because most people by that time, after 7 days, most folks don't have culturable live virus. They put it to 10 just to give some extra space. It's never 100%, between everybody. So we'll see. I'm not going to put a specific number, but we look at that window is all I say.
Will the president be confined to his residence, or will he be allowed to return to the Oval Office?
We're going to do whatever it takes for the president to safely conduct business wherever it is he needs to do within the residence and White House.
Is he on blood thinners? And also, has he been using? Have you been giving him Tylenol, Advil, anything?
Oh, that
to bring
came
his
up.
fever
I
down?
would like to say he has not been on any fever-reducing medications for over 72 hours. Yeah, he's on a routine regimen of COVID therapy. I'm not going to go into specifics as to what he is and is not on, but.
This here that the president had a mild cough, some nasal congestion, and fatigue on Thursday. Now, back to my colleague Jen Jacobs' question here. The reason knowing when the president's last negative test is important. For that reason, your words, what you said, and also for the contact tracing. But would you recommend it that, given those symptoms, that the president go to that Bedminster fundraiser?
It's not up to me necessarily, the president's schedule, but I would say that it wasn't until after he returned that we really sat down, then knowing the news of the day, that we really dove into how are you feeling, what's going on.
Those were the symptoms he was experiencing on Thursday.
I'm not going to get into operations.
When was his last negative test, and what was his viral load?
I know everyone wants that. Yeah, I don't have his viral load. Those are some of the diagnostics that we're sending out that will really tell us when it's safe for him to get back out and around people.
The last negative test was?
Any abnormal tests? Were any of his lab tests abnormal?
I'm not, again, HIPAA kind of precludes me from going into too much depth and things that I'm not at liberty or doesn't wish to be discussed. At some future point, maybe, but today, sorry. I think that's it. Yeah. Thank you.
All right, so you've been listening to the president's physicians led by Dr. Sean Conley, the White House physician. They're at Walter Reed Medical Center in Bethesda, Maryland, giving an update on the president and several headlines, I think, safe to say, Jason, coming out of that. And basically, bottom line, the doctor's saying the President Trump's clinical status supports his going home, and he is expected to go this evening. He's been given a third dose of remdesivir, which is a drug that's still in clinical trials, but thought to kind of interfere with the virus, basically making copies of itself. He's going to get a fourth dose tonight before he does go back to the White House, a fifth dose tomorrow, but they seem to be confident that they can manage his care from the White House.
Yes, and the doctor is really Dr. Sean Conley, declining to answer a couple questions about the last negative test. And I think that is one thing that people are very interested in, especially when it comes to what were the triggering events. We have seen numerous cases inside the White House, on Capitol Hill, all stemming back presumably to several large gatherings.
Yeah. Exactly. And it was interesting. They were just talking about viral load, and they were saying, yeah, I know you all want to hear about it. I don't have it. It's apparently, and I had to kind of Google, a measure of virus particles. So it's the amount of virus present once a person has been infected.
Yeah.
And the virus has had some time to replicate in their cells. So basically, I guess, how much is in him? And, I guess time will tell, Jason, whether or not this was the right protocol in letting the president leave early. He certainly does seem healthy. He's done several videos and been out there on Twitter, but I guess time will tell. As we know, this is a very unpredictable virus.
Right. And I think it also is fair to point out, and I'm sure we're going to talk about this with Josh Wingrove in a few minutes, but it's also fair to point out that it's not like you going to your house or me going to my house in terms of the medical care that is available literally right where you are in terms of the White House. So, and that was also one of the questions as to why he went to Walter Reed in the first place. So more to come on that. Let's get an update on the trading day with Charlie Pellett. Hey, Charlie.
I thank you very much, Jason. 30 minutes to go ahead of the closing bell. I was monitoring the stock charts while we had that briefing. Stocks rose as the briefing was going on, began just about 3:05 Wall Street time thereabouts, but stocks did move higher as they were speaking. So right now we are at the best level of the day on the S&P. S&P 500 index is climbing now by 60 points, a move higher. Let me give you the numbers first. We'll give you the why behind the numbers in just a moment. The S&P 500 index advancing. Dow Jones Industrial Average now up 468 points. That is a gain of 1.7%. S&P again up 60. NASDAQ is up 245 points now. That is an advance of 2.2%. 10-year yield 0.77% now. Gold is up $12 the ounce, higher by 0.7% at $19.12. And West Texas Intermediate crude oil up 6.3%, $39.39 for a barrel of West Texas Intermediate crude. So it is an update on Wall Street. Stocks climbing to a month high on optimism over economic stimulus and President Trump's release from the hospital. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's get some context for what we heard from the president's doctors, what we heard from the president himself via tweet about his expected return to the White House later on today. Josh Wingrove, he's been part of the team that has been covering this minute to minute. Our White House correspondent, part of the team. He joins us on the phone. All right, so Josh, what do we need to know beyond what we've heard? What are you hearing from sources about the sort of the state of the health of the president, but more to the point, sort of the functioning of the government and the White House?
I mean, yeah. I don't even know where to begin. All right, so Trump is going in 3 hours. He's going back to the White House. There are a lot of questions about that, almost none of which were answered by that briefing. This is the third briefing of Dr. Conley. He is not a straight shooter for whatever reason. So what we know today is that Trump's temperature is good. It's 98.1. I know that they've never released a temperature before. They said his blood pressure is good. Again, they had never released a temperature before. They refused to say how long he'll have to isolate. They refused to say where in the White House he'll be allowed to go. Like, for instance, can he go to the Oval Office? They refused to say when his last negative test was. He looks like he will continue dexamethasone. This is a steroid typically reserved for severe cases. They did not say how long that would last. He's continuing to take remdesivir. That'll wrap up tomorrow. Normally you get that in hospital, but they'll finish it at the White House. And, finally, he said one of the reasons he's optimistic for letting President Trump go back to the White House is that he described this as uncharted territory in terms of the combination and speed of drugs which a patient has received, which, to some might be a cause for uncertainty, but for Dr. Conley, it seems to be a sign of good faith. So, I mean, it's basically they continue to say that Trump is improving, and if that's accurate, then that's the case. But today did not do a lot to bolster credibility that had been strained by his previous two press conferences where he gave several misleading statements.
Man, I have to say, we are living in a bizarro world when it comes to politics over the last few days. I do wonder, Josh, you cover the White House. Your job is to get through the noise and find the facts. What do you do in this situation when we do have, this is not being political, a president who will say things that isn't true? You have people around him, whether it's his physicians and others, that will say things that aren't completely transparent. So what do you do as a reporter to try and figure out, okay, who are the voices I need to get to and that you kind of trust in this situation?
Well, all we can do is kind of take the data points that they give and take them to outside health experts. Now, the downside there is, of course, those people have no familiarity with Trump's case, but they can tell you what those drugs do. And so, for instance, yesterday, when they said, oh, by the way, he's on dexamethasone, outside doctors said that's unusual. That's usually a bad sign, not a good sign, and it's really unusual to receive it so early on. So know how typically humans react to this thing. So Trump, based on when we know he got sick, he's probably still shedding virus, which is going to be an issue, in navigating. They say that they're going to set something up at the White House so he doesn't get other people sick. But, just today alone, we've had reports of several cases linked to the White House among staff or even residence staff. So it's not just like his political aides, but, average folks who work in the White House, keeping things running. They could be put at risk by this. But, of course, workers in Walter Reed would be put by risk by serving any COVID patient, regardless of whether it's the president or not. So I don't know. I think, broadly speaking, they think Trump is improving. His doctor looks to be certainly not pushing back on the notion that Trump could start doing things, public things, in short-ish order. The CDC guidelines wouldn't really necessarily agree with that if Trump tried to push that deadline. But they described it. It looked like a week from today that this doctor might give his blessing for Trump to be back out on the trail.
Well, and that question of who he is able to interact with is a big one. And, not to be too glib about it, Josh, but, if you are being treated in a hospital, you are being treated by people who have all the right equipment, all the right protection, and who show up to work every day knowing that they are going to be dealing with sick people. That's part of what it is to work in a hospital. He is going to work at, an admittedly fancy and very well-equipped home office, essentially, where he is interacting with lots of employees on a daily basis. And to your point, many employees who we now know, including the press secretary and other people in the press shop, people who you and your team interact with all the time, have been infected with this virus. Do you have any sense of how the operations of the White House may have to change, even in the short term, even regardless of whether the president is there, given that there is a rate of infection in that office space that is unknown at this point?
I think that they've started because, of course, the First Lady has been at the White House this whole time recovering from what was a more mild case. So now you'll have at least 2 known COVID patients in the residence portion, which is the middle of the White House. I would imagine they're not going to let him go to the West Wing, which is, where the Oval Office is, where the cabinet room is, where he normally works. They'll probably confine him to the Oval. But even in the West Wing, that's where Kayleigh McEnany, who tested positive today, has been working. For instance, 2 of her press aides, it was revealed today, have tested positive. So, there is virus circulating in the White House right now. We hope that that doesn't continue, but they're going to have to figure something out to try to minimize the risk to not only the staff that work at the White House, not only the president's staff, but also other folks that come through for meetings, be it the vice president if he's there, be it cabinet secretary Mnuchin, Pompeo, what have you. I imagine all those folks are going to be briefing the president by video conference or whatnot for some time. But it just raises little questions, and the medical team simply would not get into it. They were asked specifically about how this would work, what recommendations they'd given, and they would not get into it. So if they have recommendations, they're not making them public. But it's possible, based on their answers, that they haven't drawn up any yet.
Hey, Josh, just got about a minute left. So let's hope the president is on his way to recovery. But, if he has another relapse, what does this mean? And I'm just getting from a political perspective, here we are, the election's just around the corner.
4 weeks from tomorrow.
What would that mean for him? Because I do wonder, there must have been a sense of urgency. He's got to be thinking about this, that I've got to be out there and acting presidential.
Yeah. With the clock ticking on the next debate also on the 15th of October. Yeah, it's a risk, right? The benefit of keeping him in hospital another day is that you buy yourself another day to make sure things don't go downhill, right? Boris Johnson was in hospital for something like 9 days before they transferred him to the ICU. For President Trump to be in and out of Walter Reed in 72 hours is obviously quite a different timeline. So they're taking a bit of a risk. But yeah, he wants to be out there. He is obviously the face of the party. That goes without saying. But he's not going to be able to. They're not going to get the same draws for rallies with Mike Pence as they would with Donald Trump. They potentially would struggle with fundraising if they don't have him out there. So they look to be rushing him out there. Finally, I know we're running out of time. He did tweet that Americans should not be afraid of COVID, that should not let COVID rule their lives or dominate their lives. I think that tweet is going to come back to bite him a bit because, of course, the health price, the toll of Americans who've suffered from it, and not to mention he tweeted that from a hospital where he had free elite care that is obviously not available to Americans at large.
Yeah, and it has been noted by many people that the families of the 209,000 Americans who've died of COVID-19 might very, very violently disagree with that sentiment. Josh Wingrove, thank you so much. We really appreciate it. White House correspondent for Bloomberg. Let's get some world and national headlines now with Nancy Lyons. Hey, Nancy.
Thanks, Jason. President Trump will be returning to the White House from Walter Reed Military Medical Center later today after receiving a fourth round of remdesivir, one of the drugs being used to treat his coronavirus. His doctor, Commander Sean Conley, just spoke about the president's condition.
Though he may not entirely be out of the woods yet, the team and I agree that all our evaluations, and most importantly, his clinical status, support the president's safe return home, where he'll be surrounded by world-class medical care 24/7.
Conley says the president has not had a fever for 72 hours. His oxygen levels are all normal. But Conley refused to give details about scans of President Trump's lungs, citing federal health privacy laws. Well, now the President Trump is planning to leave the hospital where he's been treated. His Democratic rival, Joe Biden, says once he's no longer deemed contagious, he'll be ready and willing to return with him to the debate stage. Biden spoke in Delaware this morning.
If the scientists say that it's safe and the distances are safe, then I think that's fine. I'll do whatever the experts say is the appropriate thing to do.
Well, 2 Americans and a British-born scientist are the winners of this year's Nobel Prize for Medicine. Thomas Perlman is Secretary General of the Nobel Committee.
Harvey J. Alter, Michael Horton, and Charles M. Rice for the discovery of hepatitis C virus.
Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Jason.
Nancy Lyons with the headlines. Thank you so much. This is Bloomberg.
It's been a slow journey from the inside out.
Is this Dave talking about his 30 years at Bloomberg?
Slow journey.
Is that Huey Lewis? No. It's not, is it?
No, it's... I feel like it's a familiar voice, but I can't get there on it, Dave.
John Hyatt.
John Hyatt. Well done. Well done.
I'll tell you, if you're thinking, who is this guy? Carol, you know Bonnie Raitt's thing called Love, right?
I love her, and I love that song. Yes.
Yeah, written by John Hyatt.
Yeah, great
very
songwriter.
cool.
Great songwriter.
Very cool.
So tell us how this plays into your chart, Dave.
Yeah, because there's some slow turning going on when it comes to the effect of dividends over time. You know, this chart is really an evergreen. That's why I put it on the Bloomberg terminal a week ago and put it out to my email subscribers today. It's something that Eddie Elfenbein over at the Crossing Wall Street blog highlighted just before I went on vacation last week. As he put it in a post, investors don't fully appreciate the importance of dividends. So what he did was compare the S&P 500 to its total return version, which includes the payouts. And so you go back to 1988, which the chart does. That's when our data, at least on S&P 500 total return index, begins. And you find out that the payouts have, in essence, added 2.2 percentage points a year on average. And in fact, they accounted for more than half of the S&P 500's return in the period, which exceeded 2,500%. So we're talking more than half of that just coming from dividends. Now, of course, you can't reinvest the dividends in an index directly. You could do it with, say, an exchange-traded fund, but it just gives you a sense of how important payouts are to investors over time, specifically the effect of dividends on how much wealth people can build in the stock market. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's just like such an old-fashioned investment strategy. I just think of, I know I've mentioned this before, like DRIPs, dividend reinvestment plans. Like I just remember early on in my, business news career, like doing pieces on this, and it's just so simple, right, Dave? But it does pay off.
It's slow and steady winning the race. I mean,
Yeah.
as opposed to, waiting for the big gains in stocks. And let's face it, we have to remember, a fair amount of companies that we all focus on don't pay any dividends at all.
Right.
Think Berkshire Hathaway, think Google's owner Alphabet, and a whole lot more where they came from. So, it just goes to show you the effect that dividends can have on just how well investors do over time.
Was it slow and steady your 30 years here?
No, I think it was basically the opposite.
Really?
Fast and
Like
Furious.
crazy?
I think Fast and Furious.
Is more like it. Absolutely. I mean, from one change to the next, to the next, to the next. I was telling people earlier today on a conference call, I think I've reinvented myself about 4 or 5 times in my history here at Bloomberg.
That's the Bloomberg way, to be quite honest.
It is.
Absolutely.
It is indeed. Yeah, I mean, you've been a columnist. You've been the New York bureau chief. You were the Princeton bureau chief. You have obviously been on air. You've run teams. I mean, so many things, Dave.
Did you have have you had a favorite
stock market coverage globally? So
have you had a favorite time or like a favorite time of coverage?
I mean, they each sort of have their own advantages. I mean, it's one thing, though, to kind of be the startup taking on the big guys. Because really, that's what we were when I got here at 1990. It was 3.5 months after Bloomberg News published its first story. Bloomberg Radio and Television weren't even in the picture at that point. So, it was really kind of going uphill and trying to battle the established, business news organizations. So, there was something really exciting in that. And clearly, over the past 3 decades, things have worked out okay.
Yeah.
I will say, Dave Wilson did share something with us earlier that, it was a fairly robust newsroom, and it was all very close together. And in the early days of Bloomberg Radio, sometimes he was on Bloomberg Radio, but not because he was actually in front of a microphone, just sort of in the background.
No, absolutely, because they had radio microphones and the print newsroom on the same floor.
Yeah.
So I'd be yelling at somebody about a story, and they'd pick it up and put it in their report. It just sort of happened that way because it was like ambient sound.
Exactly.
Loud ambient Dave Wilson sound.
Ambi, as the radio guys call it. All right, Dave Wilson, thank you so much. We'll catch up with you right after the close of trading for your stock of the day. In the meantime, speaking of stocks and markets, let's get a check on the market day with Charlie Pellet. Hey, Charlie.
All right, thank you very much. Just about 14 minutes to go, and I remember those days well that Dave Wilson was talking about because I'm celebrating my 28th anniversary of Bloomberg today. The Dow, the S&P, NASDAQ, all surging right now as we head toward the closing bell. Let's begin with the numbers because we have got the S&P 500 index up now by just about 56 points, a gain there of 1.7%. The Dow up 444. We are close to session highs now, up 1.6%. NASDAQ up 241, up 2.2%. The 10-year yield 0.77%, down 21/32. Gold up $11 the ounce, higher by 0.6%, 19.11 right now on gold. And West Texas Intermediate crude surging 6.2%, 39.35 for a barrel of West Texas Intermediate crude. Bottom line here, stocks 1 month high on optimism over economic stimulus and President Trump leaving the hospital. Again, the Dow, the S&P, and NASDAQ all surging here. S&P up 56, up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the drive to the close. We're going to check in with Vance Howard. He is the CEO and portfolio manager of Howard Capital Management. They look after about $2.8 billion. He joins us on the phone from the great state of Texas. Vance, really nice to have you with us. How are things down in Texas? What's it like?
Man, it is a beautiful day here in Huntsville, Texas. Market's going up and the weather's terrific. So you can't ask for much more.
So there's no problems out there, right, Vance?
Everything's fine.
Sorry about my sarcasm. Large family, that it does it to you. No, but how do you see it? I mean, to be fair, and Jason and I have kind of kidded about this over the last couple of weeks, but it does feel like the markets certainly move on whether or not there's the likelihood of another stimulus package because of the virus. It does seem like markets move on that specifically. There are still a lot of problems out there.
Well, there's plenty of problems, but we live in a world where there's plenty of problems each and every day. So you just sort of got to trade through them, and if you let it hinder you, it's going to cause you a lot of grief and a lot of issues when you might be missing a wonderful market.
So let's talk about the market, because it felt like last week it was a little more worried. Today feels less worried. What do you owe the change in sentiment to, even in the short term?
Well, I think that we were pretty much overbought on a technical basis into September. So I think sort of what you saw, we've seen over. I'm sorry. Got up to the beginning of September, it was overbought, and then we've had sort of a mild correction. I just think it's sort of an unwinding of that technical overbought process. I think as far as the market goes, I think the market's firming up and looking pretty strong. Again, and we all know that there's issues out there. We know there's a lot of headwinds, but there's a tremendous amount of cash on the sidelines, and I think that's being deployed now. I'm looking at the 20-year treasuries, TLT and SHY, the shorter duration treasuries. They're starting to sell off quite a bit today, so a lot of that money's coming back into equities.
Yeah, does that make sense to you? Is that how you would play it?
It's absolutely how we're playing it. We've been playing, we've got the HCM byline, which pulled us out of the market towards the middle of February, and almost 60% in cash in March. It went positive, and we went 100% back in the first 2 weeks of April. We've been 100% long since April, and we told our clients and people that read our newsletter that any pullback's a buying opportunity, and we felt the same way with what happened in September. We think it's a buying opportunity. We've been adding to positions on every days that are down.
And so how do you look at the big tech names, Vance? Because, we've seen them really lead all the way up here, to the point where, some folks are looking at the valuations around an Amazon especially, or an Apple or a Microsoft, and maybe getting a little concerned. Are you?
No, we're not, because we're quant driven, we're math driven. And, when we went back into the market in April, the strongest quantitative sector out there was technology. We've been long technology, since the first couple of weeks of April, and that's clearly been the right trade to take. When you look at the value stocks or high dividend paying stocks, they've done virtually nothing. Now, the past couple of days, they've actually started to pick up a little bit of momentum, which is interesting to see. So maybe we're starting to see a little bit of a cycle out of the tech, maybe into more value and high dividend paying stocks. But again, you look at the amount of money that some of these companies are making, and it's very attractive.
So Microsoft, Amazon, just continue to plow new money into it. And if there's a pullback, plow in even more?
I'd be buying more, yes.
So what are you avoiding at this point then, Vance?
Well, I think you need to avoid certain sectors. Like, we're not too very keen on energy. That's been a sector that we've not played very heavy in at all over the past 2 or 3 years. It's gotten extremely volatile, very unpredictable. So that's one sector we're really not looking at too very hard. Biotech is actually starting to firm up just a little bit. Consumer discretionary is firmed up quite a bit. But again, go back to our theme since April of this year with Howard Capital. It's technology, technology, technology. Go where the money's going.
So talk to me about the election, because, we're roughly 30 days out. I mean, the election day is literally 4 weeks from tomorrow. We're in the final stretch here, even setting aside the president's, COVID diagnosis of late last week and everything we saw over the weekend. What role does the election play? How does it factor in to your algorithms? How do you figure it out, especially at a time where we don't know if history is a really good guide here?
Yeah, I think that's a great question, guys. They, like I said, we trade completely math-driven, so we try to take the emotion completely out of the equation. The byline, our proprietary indicator, is positive. As long as it stays positive, we're going to stay long this market no matter what happens in the election, no matter what the day-to-day news feed is about the election. That's a key component, guys. You got to take the emotion out of this thing. If not, it'll drive you crazy. And the more emotion you put into your trading, the worse your returns are going to be, because you make mistakes that just aren't rational and they don't add up mathematically. So the more you can take the emotion out of the equation, the better off you are. But as it stands right now, the HCM byline's positive. As long as it stays positive, we're staying long this market.
Well, you mentioned, okay, so safe to say you're bullish. But I do wonder, Vance, in terms of your quant model, what is it that you guys, obviously you can't give us all of your proprietary, algorithms and your formulas here, but what is it that you prioritize? Is it earnings? Is it economic outlook? Is it just, valuations that are low? What is it?
Well, I think that you have to look at it in the way, the direction of the market. And I think that's what's been really key to the HCM byline, is pointing us in the direction of the market. And a lot of times we can overthink things in life. We can sit there and say, if this happened, the world's going to fall apart. If this happens, the world's going to be great. Well, that's really not how things work. You have to trade in the now. For me to tell you how the elections are going to affect the market 30 days from now, I don't know. Nobody knows. It's an unknown quantity. But what I do know, as of this day on Monday, the HCM's byline is long. We're staying long this market. If it changes, we'll change our direction and how we allocate to our clients' accounts. It's going to be volatile. There's no doubt about it. And I think this is critical. And I know you being a news media, I keep telling clients all the time, one of the best things you can do, you probably don't want to hear this, is to be quite candid, turn off the news. It creates emotional distress, and it makes you make decisions that maybe aren't the best in your best interest long term as far as playing this market and making money.
So, just as we wrap up here, Vance, I want to pick up on that because we also know that in your background, you've been a public servant. You served on the Huntsville City Council, and so you understand sort of pocketbook economics in many ways. And I would argue that, some folks, they're not reading, the newspaper, they're not listening to the radio, but they're just looking at their job or their lack thereof or sort of the local economy. And they're still worried. How do you sort of synthesize all that? And unfortunately, you've got to do it in a minute.
I think everybody's worried. There's no doubt about it. And, if you're unemployed, you're even more worried than somebody who might be employed. But I can't change that, and you guys can't change that. So
right.
As a money manager, I've got to take that out of the equation. I'm not hired to feel. I'm hired to make people money. And that's what we do. We keep it down to a mathematical equation. We trade the math, take the emotions out of the equation as best that we possibly can, and we trade in the now. And right now, the HCM byline's positive. Be long.
All right. Well, really interesting to catch up with you, get your perspective. Thank you so much. Vance Howard, CEO, Portfolio Manager of Howard Capital Management, joining us on the phone from lovely Huntsville, Texas.
Do you think he's, bullish on the market?
A little bit.
A little bit.
But, listen, he's got the math to prove it.
Yeah.
He's got the courage of his convictions with the numbers. So interesting to see that, and interesting to hear someone who is so straight ahead, such a straight ahead bull.
Yeah, exactly. Well, he's got those algorithms in place, and that's what they're telling him to do. All right, stick around, folks. The close just a few minutes away.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
On Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, October 5th. The Dow, the S&P, and NASDAQ all advancing today. Folks from John Hancock Investment Management virtually ringing that closing bell. Stocks climbed to the highs of the session amid optimism that President Trump would leave the hospital later on today. Treasury yields jumped, the dollar weakened, the S&P 500, NASDAQ, Dow Jones Industrial Average all rebounding from Friday's swoon in the wake of President Trump's coronavirus disclosure. Closing numbers again close to the best level of the day with the S&P up 60, a gain of 1.8%. The Dow rallied 465 points, up 1.7%. NASDAQ up 257 points. For NASDAQ, that was a gain of 2.3%. 10-year down 22.30 seconds. 10-year yield 0.77%. Gold up 0.6%, 19.11 the ounce. And West Texas Intermediate crude rallying 6.2%, 39.35 for a barrel of WTI. Regeneron Pharmaceuticals rallied after President Trump was given an experimental antibody treatment made by the drug maker. Energy, health, and technology shares were the biggest gainer in the S&P 500 index. Today we saw Regeneron shares advancing by just about 7.1%. Again, an update on Wall Street. As for the market backdrop, Vance Howard is Chief Executive Officer of Howard Capital Management. He was our guest moments ago right here on Bloomberg Business Week.
I think as far as the market goes, I think the market's firming up and looking pretty strong. Again, and we all know that there's issues out there. We know there's a lot of headwinds, but there's a tremendous amount of cash on the sidelines, and I think that's being deployed now. I'm looking at the 20-year treasuries, TLT and SHY, the shorter duration treasuries. They're starting to sell off quite a bit today, so a lot of that money's coming back into equities.
Tesla shares advancing today. Dow Jones is reporting that J.P. Morgan Chase raised its target price on the stock to $75 from $65. Tesla shares up today by 2.5%. Stocks higher. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking. Let's do it.
With Carol Masser and Jason Kelly on Bloomberg Radio.
All right, everybody. One in the books for this week. And what a Monday it's been. Charlie, of course, breaking down those closing numbers. And we did finish pretty much at our highs of the session. We did get an uptick following that press conference by the physicians of President Trump, saying that he is expected to go back to the White House this evening. So we did see what was already a bullish day even trend higher following that press conference. So let's break it down for you. If I take a look at the S&P 500 today, we are seeing most names in the index higher today, 458 to be exact, 44 lower, 3 unchanged. Let's also bring in Sarah Ponzak, who's with us. She's been watching the market. She's our Bloomberg News cross-asset reporter, joining Jason and myself. So Sarah, a bullish day.
It really was a bullish day, and your classic bullish day. Almost everything was up. You look at the major averages, all up at least 1.5%. The NASDAQ leading the way, up more than 2%. So you see tech leading the way. But at the same time, you also saw the cyclical bent in the market. If you look at small cap stocks, up 2.7%. Some of the best performing sectors, energies, for example, very cyclical, economically sensitive. We also saw oil up more than 6%. We even saw a measure of volatility gain, which is a little bit strange to see. But the one thing that we saw that was not higher was the bond market. And we really did see a pretty steady sell-off in the Treasury market throughout the day. You look at 10-year Treasury yields now at 77 basis points, 30-year yields, where we really saw the bulk of the pickup in yields was at the back end of the yield curve. So we did see a steepening in the yield curve as investors maybe hope for more fiscal stimulus, better growth prospects, even price in the potential for inflation. We're back to that story again. And if you look at that yield curve, the spread between the 2-year yields and the 30-year yields, for example, 142 basis points. So that's now the widest since early June. And it looks like we're almost on the cusp of a breakout to the highest since 2017.
Wow. It's nuts, right?
And meanwhile, you've got, as you said, Sarah, just a lot of strength across the board. I mean, one name, we love talking about the chip names, and one name that got an especially solid bid was NVIDIA, up about 4.5%, some bullishness tied to the CEO. I mean, that stock, let me just look for the year. It is up 131%.
Right.
Yeah.
It's unbelievable to watch. And it really did lift the entire sector. You look at S&P 500 industry groups, for example, and the semiconductor industry group was the best performing, up more than 3% today. But NVIDIA today up for a ninth day in 11, tacking on another more than 4% gain to what has already been an incredible year. And yes, there are structural changes going on in the chip industry. They also stand to benefit from everything going on with COVID-19, some analysts would argue. But at the same time, chip stocks are almost seen as a quasi-read on the economy. So when you do see chip stocks performing very well, yes, it's the new economy, it's still a positive sign.
So just by way of context, so Intel, that stock is down 13%, long the world's largest chip maker. Its market cap, $219 billion. NVIDIA's market cap, you want to guess what it is, Karen?
What is it?
It is $336 billion.
Wow, isn't that nuts?
That's a whoa.
It's like Tesla versus like your traditional automakers, right? It's just
It's really unbelievable. I mean, it's just
like
amazing.
A Tesla versus a Ford.
Yeah, right?
Yeah, crazy. Meanwhile, back in sports world, DraftKings, they are continuing to be a fascinating stock to watch as well, Sarah.
Right, and this is another stock that has just been high flying all year long. So essentially what happened this morning was there was news that some very early investors and high stakes investors, like Robert Kraft, for example, who is of course the owner of the New England Patriots, that they are taking advantage of this rally that we have seen, and they're going to sell a combined 32 million shares. So whenever you see news like this, that investors are tapping out, taking their cash, that's usually typically seen as a bearish sign in markets. It's not odd that you see a sell-off. We saw DraftKings shares down a little bit more than 5% today, but you have to put it in context because since April, the stock is up more than 260%.
Wow. Amazing. All right, Sarah Ponzak, you're the best. Thank you so much. Queen of Wall Street. By the way, I shared that with Alex Steele. She's the queen. Anyway, let's take a quick look at volatility. The VIX, it is up just a touch. Let me see what it is. Carol Mazur. It's up, about 1.7%, the VIX, closing at 28.09.
But that's kind of interesting, especially on a day when stocks rallied. You'd think the VIX would be down.
You would think. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door. It's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, Mr. Wilson, hit us with your stock of the day.
EPR Properties, a company refers to itself as an experiential real estate investment trust. So we're talking about a company that owns places where people have experiences, movie theaters, entertainment centers, amusement parks, ski resorts, casinos, hotels, and more. EPR was founded in 1997 and went public the same year. The ticker is EPR. The company's shares set a record in 2016. This year, they fell as much as 83% in a 2-month period that ended in mid-March. Now, EPR has yet to recover most of the loss, and today, the stock slumped after Regal Entertainment said all its U.S. movie houses would close temporarily on Thursday. The move followed delays in the next James Bond film and other major productions because of the coronavirus pandemic. Now, about 14% of EPR's annual base rent comes from Regal owner Cineworld. That's according to Citigroup. The firm said that percentage is the highest among the REITs it follows. Now, the potential fallout from Regal's shutdown sent EPR shares to their biggest loss since April. They dropped more than 11%.
All right. Interesting. I mean, listen, the movie theaters, brutal business right now.
Yeah, it's like, listen, that's a business along with, I feel like, hospitality right now. It's just tough to be in because there are just people who don't want to be anywhere near those kind of places.
Cruise lines. Right?
Cruise line, another one, right? That was pushed off the U.S. sale dates to the end of October again.
Exactly. All right, let's get out to the West Coast. Ed Baxter is there. He's got your World National Headlines. Hey, Ed.
Hey, Jason, in Washington, D.C., the focus again. President Donald Trump has tweeted he'll leave the hospital for the White House this evening. His doctor, Sean Conley, says everything that can be done at this point can be done at the White House. But he says the circumstances with Mr. Trump do need watching.
We all remain cautiously optimistic and on guard because we're in a bit of uncharted territory when it comes to a patient that received the therapies he has so early in the course.
So he has received extraordinary therapies, but...
So we try to get patients home and out of the hospital as quickly as is safe and reasonable. Every day a patient stays in the hospital unnecessarily is a risk to themselves.
Now, part of the president's tweet today said, feeling really good, don't be afraid of COVID. Don't let it dominate your life. We have developed under the Trump administration some really great drugs. So this would have to beg the question of whether he continues to downplay the severity of COVID-19. California's Governor Gavin Newsom was asked about the comment at his news conference.
To dismiss this pandemic as anything but what it is, a deadly pandemic, deadly disease that's impacting lives, destroying families, as well as our economy, I don't think advances the collective cause of bringing this country back together.
And Joe Biden says he wants a second debate, but will listen to science.
If the scientists say that it's safe and the distances are safe, then I think that's fine. I'll do whatever the experts say is the appropriate thing to do.
In San Francisco, I'm Ed Baxter with Global News 24 hours a day. This is Bloomberg.
All right, Ed, thank you so much. Well, for the past few weeks, especially leaning on our green team, we've been talking a lot about climate. And here comes some news via Bloomberg, scoop, about ExxonMobil Corp. They have been planning to increase annual carbon dioxide emissions by as much as the output of the entire nation of Greece. That is based on an analysis of documents reviewed by Bloomberg, setting one of the largest carbon emitters against international efforts to slow the pace of global warming. We know this is what causes it.
This is
amazing.
I am like gobsmacked. And a bunch of Exxon's, competitors, BP, Royal Dutch Shell, I mean, they're moving to curb oil and zero cut emissions or zero out emissions. That's the trend. We've been talking about that. That's where everybody's moving. So to find out that this has come out is kind of mind-blowing. They are the largest U.S. oil producer. They have never made a commitment to lower oil and gas output or set a date by which it will become carbon neutral, and its near-term plans have been disrupted by fallout from the virus. They've also never publicly disclosed its forecast for its own emissions. It's kind of like, really?
Yeah.
Like, it's kind of shocking. Not only have they not come out publicly and said, here's what we're going to do, but then to show internally they're actually going in the other direction.
Right. And and they have, made much of their own efforts to reduce pollution, talking about renewable energy, burying some carbon dioxide. All these have gotten a lot of headlines, and, people are like, yeah, you should do that. But then meanwhile, they're like, yeah, and we're also going to just pump a bunch of stuff into the atmosphere that dwarfs anything that they're doing on the positive side.
Exactly. That's the point. Net, what they're actually doing is going to be worse. It's not like it's, they balance out one another, but actually they're going to be putting, more muck, if you will, into the atmosphere, into the climate. So I don't know. You're shaking your head. I'm shaking my head because
SMH.
Does anybody understand what's going on around this world?
No, we should. We should. We're going to talk more about energy coming up. Boom.
hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service. KNS agreeing to sell its American salt unit to Stone Canyon. Price tag there, $3.2 billion. It was an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing today. We had stocks closing at the highest level of the day amid optimism that President Trump will be leaving the hospital shortly. Also, lawmakers will move closer to providing more stimulus. The S&P 500 index up 60 points, a gain of 1.8%. The Dow up 465, up 1.7%. NASDAQ up 257, a gain of 2.3%. 10-year yield 0.77%. Gold up 0.7%, 19.13 the ounce. And West Texas Intermediate crude oil today up 6.3%, 39.38 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it went public on Friday on the New York Stock Exchange in a non-traditional way, but Jason, we know it's one that we're seeing more often in this unusual year of 2020. The company we're talking about is Hyliion. It completed a merger with Tortoise Acquisition Corp. It's a SPAC, a special purpose acquisition company, something that has become all the rage.
Getting used to those.
In 2020, totally. So here to tell us about the move, what they will do with the money they raised is Thomas Healy, CEO and founder of Hyliion. He joins us on the phone from the New York Stock Exchange. You rang the bell, opening bell this morning. Thomas, great to have you here. Congratulations. Tell us about your company and this move and what you'll do with this money. What's the plans for it?
So Hyliion is electrifying the commercial vehicle sector, and we're doing it in a unique way where we actually focus on the powertrains of the vehicle. So we're a powertrain provider to the existing truck OEMs to be able to supply our electric solutions in the already existing trucks that are out on the road. And really the focus of the organization here is being able to deliver low-cost solutions to the trucking market that also have a strong positive impact on the environment.
So how does it work? I mean, it seems like one of those things is like, oh, cool, you just change it out. But I know
retrofit, right?
Just enough to be dangerous. Like, that can't be that easy. So how does it work?
So we actually have two products that we're bringing to the market. The first is a hybrid electric solution. So the best way to think of that, it's like a Toyota Prius, right? You still have your diesel drivetrain, but we reduce some of the fuel consumption. And then we also have what we call our Hypertruck product, which is a fully electric drivetrain. And then as opposed to plugging into the grid to recharge the batteries, we actually leverage renewable natural gas that we store locally on the truck that produces electricity as you drive to charge the batteries up. And so in terms of the two products, the hybrid one can be retrofitted or put on a new truck, and then the Hypertruck comes as a brand new vehicle.
So what's the market? Is it unlimited? Is it a billion? Give me an idea of the market size that your guys potentially can go after.
Yeah, it's a huge market. I mean, there are over 2 million trucks out on the road today, 300,000 in the U.S. alone being produced every year, about 1 million worldwide being produced yearly. So it's a tremendous market opportunity. And one of the really unique things from our standpoint as we're addressing, customer needs here is that we're working with fleets who operate, hundreds, if not thousands of vehicles. And when they select our powertrain as of choice, then, this becomes a recurring revenue cycle for us, right? I mean, once they select which truck they're going to use and what drive system, they're buying hundreds, if not thousands of trucks every year. And that becomes part of our order book, which is, a much different economics than if you're going after the passenger car space.
Right. So help us understand how this works, because I confess total ignorance here. I mean, who are the decision makers here? Like, who are you ultimately selling to? Because presumably you're not selling to the truck makers necessarily. It sounds like you're selling to the fleet operators who have the ability to make these decisions around their fleets. How does that work?
Yeah, so it is with the fleets. And so it's companies like Penske, Ryder, Ideal Lease. All those guys already have our hybrid solutions deployed in their fleets. We're still in low volume rollout, but we're scaling up volumes as we move forward in the years ahead. And then today we actually had Wegmans, which is one of the leading grocers here in the Northeast. We actually had one of their trucks that already has thousands of miles on it parked out in front of the New York Stock Exchange.
And that was one where you were able to just retrofit, or how did that work?
So Wegmans has actually done both with us. They've done both retrofit, and actually the vehicle that they had here today was a brand new truck a couple of months ago that they've already started running in their fleet.
So I want to ask you, if it all makes so sense to have electric trucks and electric fleets, why don't we have more of them at this point? What's been holding it back? Is it the batteries? Because it takes a lot of momentum to get, the bigger the vehicle is.
Big old truck.
It takes a lot more to get them going. What is it, though, that's been holding them up? Because I'm just curious about what will either impede your rollout at this point.
Yeah, so we've seen a mega trend really in the passenger car space of bringing electrification forward. And, as you look at trucking, it's a very different equation, right? Trucks are trying to drive 500, 600 miles a day, but they're also trying to be as light as possible because you want to put cargo in the trailer as opposed to haul batteries around. And that's where, when you look at, what works in the passenger car space, it doesn't necessarily work in long-haul trucks. And what we're seeing happen in the trucking industry is there's really three technologies that are prevailing. It's Tesla's battery electric plug-in truck, it's Nikola's hydrogen fuel cell truck, and then there's our Hypertruck that leverages natural gas as the fuel source to recharge the batteries. And when fleets look at this equation, it really all comes down to cost, emissions, and infrastructure of being able to recharge the truck. And in each one of those categories, we're able to save fleets money. It costs less than running a diesel truck. In terms of emissions, we actually have a net carbon negative or below zero emissions profile on our vehicles. And we're leveraging an infrastructure of over 700 natural gas stations that are already out there. So, we really are checking the box in each one of those categories and offering the fleets the easiest solution to adopt in electrification. But we're still at the early rollout phase, right? I mean, electric is new to the trucking industry.
Right.
Yeah. All right. Well, we look forward to keeping in touch with you. So fascinating. We didn't even get into all the SPAC stuff, so we'll have to catch up on that next time. Thomas Healy, thank you so much. CEO of Hyliion, newly public on the New York Stock Exchange, rang the bell this morning. So can I tell you something related to electric?
Yeah.
Test drove a Tesla this weekend.
And did you push the button? Did you buy it?
I haven't bought it yet, but it's incredible. It's incredible. It is a really, I mean, look, I'm sure all electric vehicles are incredible. This is not a Tesla ad, but like the
I've been in a Tesla, I've been in a Prius. They're very different.
Well, but a Prius is a hybrid.
That's true. Okay,
yeah.
Fair enough.
So that, and in fact, when I was testing it, the guy asked me if you've driven an electric car, and I said, I've driven a hybrid. He's like, nah, this is a different thing. It is a different thing.
But it's also a Tesla. No
True.
offense. Which
True.
is kind of electric on steroids.
Yeah, it's a whole different vibe, that's for sure. I mean, even just the interior is very different, I think. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to talk about facts. Yep, we're going to talk about facts when it comes to politics and the election, which is 1 month from tomorrow, 4 weeks from tomorrow.
Can't even
Crazy.
Yeah, facts do matter, folks, and so this next guest knows all about that. That's exactly what they have set out to do. We'll get to that. The president of USA Facts in just a moment. Poppy McDonald is who we're talking about. First up, though, back to Charlie Pellet with the news of the day. Hey, Charlie.
Well, hello there. It's a fact stocks advance today. The Dow, the S&P, and NASDAQ all moving higher on this first trading day of the new week. In fact, stocks closed at the highs of the day amid optimism that President Trump would be leaving the hospital. Also, lawmakers will move closer to providing more stimulus. S&P 500 index up 60, a gain of 1.8%. The Dow up 465, a gain of 1.7%. NASDAQ up 257, a gain of 2.3%. 10-year down 23.30 seconds, 10-year yield 0.77%. Gold up 0.7%, 19.13 the ounce, and West Texas Intermediate crude up 6.4%, 39.41 for a barrel of West Texas Intermediate crude. Well, as for the market backdrop, where do we go from here? Dennis Gartman is the former publisher of the Gartman Letter.
The market seems to want to go higher. The monetary authorities remain continuously expansionary. That's not going to change. The Fed has made it abundantly clear that the overnight Fed funds rate is going to remain at or near zero for a long period of time going forward. Hard to, even with the presidential circumstances prevailing regarding COVID-19, the market wants to go higher. It's astonishing to me. It's a fascinating circumstance, but after all, this is a bull market.
Bristol Myers Squibb buying MyoKardia for $13.1 billion in cash in a deal to expand its offering of heart drugs. Today we saw Bristol Myers Squibb up 0.8%. MyoKardia, though, surged 57.84% today. Regeneron Pharmaceuticals climbed the most in almost 7 months after President Trump got the biotech company's antibody cocktail to treat COVID-19. An SVB analyst says President Trump's treatment was, quote, the ultimate validation for Regeneron. Regeneron shares did climb today, up by 7.1%. Recapping the Dow, the S&P and NASDAQ all higher. S&P up 60 points today, higher by 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I have to say, I have really been looking forward to this next conversation. Never more important has been the work that this group is doing. We're talking about USA Facts. We're lucky to have their president, Poppy McDonald, with us here on the phone from Seattle. So, Poppy, really good to have you here with Carol and myself. So timely, given what you guys are doing. Facts matter. Tell us what you're doing.
Thank you, Jason and Carol. I'm so thrilled to be able to bring USA Facts to your very data-driven audience at Bloomberg News. And USA Facts, we exist as a resource for Americans to access trusted data and facts about how our country is doing. And so at usafacts.org, we compile over 70 federal government data sets and give a clear and accurate picture of what are the sources of government revenue, where are we spending those dollars, and what are the outcomes for our country. And the goal is not just to make that information transparent in a form of a 10K, which your audience would be familiar with, but also to allow Americans to have debate start with agreement on what are the facts, and then to advocate for positive change that you want to see. And no matter who you vote for or the policies that you support, is it moving the numbers in the right or is the wrong direction, however you define that. But we want there to be a data-driven assessment of the country, and we think that's really important given divisiveness in the country right now.
Agreed. And I got to say, Poppy, the site, you guys point out, you don't make judgments, you don't prescribe policies. It's just the facts based on government data. And I think going back to what you just said, and we've had guests on, Jason, who said, why is everybody so angry out there? And I feel like so much discussion, so much debate starts with, not facts. And that's where things get, in trouble. So tell us a little bit. I'm curious about how the site's been working, because you guys have been up, I think you were rolled out back in 2017. Steve Ballmer, former Microsoft CEO, created this. And I do wonder, what kind of activity you've seen. What is it that people want to know?
Well, right now we see a lot of people coming for what's happening in their life. So, of course, it's COVID right now, right? They're coming to get information about how is the disease spreading, especially based on where they live. So they can look at for their county, what are the trends and how does that compare to other places in the country? And then we marry that health data alongside in our COVID Recovery and Impact Hub at usafacts.org. We marry that with other data about how's our economy doing, what's happening with unemployment, what's happening with savings and personal spending, and then what does this mean for our government? They are spending a lot more money, right? There was this $3 trillion CARES Act, which ended up in a fiscal year where we spent over $6 trillion and a growing deficit, 3 times what we expected. So allow Americans to really get a picture of what is the impact then on not only our health, what are the risks, but what does it mean for our country in terms of the future by the numbers?
And so how, I guess, tell us a little bit more about how you pull this data. You talked a little bit about this, but where exactly does it come? Are these federal databases, state databases? Like, how does that back end of it work?
Absolutely. So we have over 70 government data sets that we're pulling together, and getting that data, while it should be publicly available and accessible, this is our data for Americans, the 328 million shareholders in this country. It's not always easy to get. So in some cases, we're receiving the data on a CD where we have to download it. And in some cases, for example, with COVID, our team went county by county to over 3,000 counties in the U.S. and collected that data, sometimes from a sheriff's Facebook page at worst, and aggregated it and made it easy to use and accessible. The CDC actually is using USA Facts as their source for this data. And it really speaks to how challenging it is when there's not a pipeline of local to state to federal data collection and transparency. It's definitely not real time. And so the goal of USA Facts is to make it accessible, make it available, and make it easy to use. When you look at an issue like the environment, for example, we had to go to over 9 federal agencies to collect all of that data to show what is the state of the earth by the numbers.
Yeah.
And that's pretty true across the board, no matter what you're trying to get a handle on. And Steve found that personally, Steve Ballmer, when he left Microsoft, and he was looking at an issue like poverty and saying, I want to get a handle on where are we as America? What are the government's own efforts? Are they working? And what are the gaps? And as he tried to look at the numbers, he thought it would take 2 weeks. It took 6 months. And so he said it shouldn't be this hard. He couldn't imagine running Microsoft without data to make those decisions. And he doesn't think that voters or people in government should be forced to make decisions without data either.
Right. All right. Hang with us, Poppy, because we got a lot more questions for you. You want to talk a little bit about the things you've learned across your career. You've had a fascinating career working in journalism at Politico and other places. So want to understand how all this fits together, especially at this crucial time ahead of a big election. President of USA Facts, Poppy McDonald, she's going to stick with us. In the meantime, let's get back to Ed Baxter. He's just down the coast in San Francisco. Hey, Ed.
All right, thank you, Jason. President Donald Trump has been cleared by his doctors to go back to the White House, but Dr. Sean Connolly says they are in uncharted territory in that the therapy the president has received is way earlier than usually administered. So he says, not out of the woods.
So we're looking to this weekend. If we can get through to Monday with him remaining the same or improving, better yet, then we will all take that final deep sigh relief. But as I said, 24/7 world-class medical care surrounding him down there. We're not going to miss anything.
Now, the president has tweeted, quote, feeling really good. Don't be afraid of COVID. Don't let it dominate your life. We have developed under the Trump administration some really great drugs. So sidebar, Regeneron antibody cocktail used by the president is under scrutiny in a lawsuit. The suit says it was developed with the unauthorized use of a fluorescent protein. And then the question of whether the president is downplaying the threat again. California Governor Gavin Newsom says it cannot and should not be downplayed.
200,000+ people have lost their lives, lost a loved one. I watched today Mayor Garcia of Long Beach on a national show reminding us that he lost both of his parents.
New Jersey Governor Phil Murphy says a fundraiser that Mr. Trump attended in the state.
The actions leading up to and during this event have put lives at risk.
And he says they need massive contract contact tracing, I should say. And White House spokeswoman Kayleigh McEnany says she has tested positive. New York Governor Andrew Cuomo says he's taking over enforcement of the state's hotspots. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. We're going to get back to our conversation in just a minute with Poppy McDonald talking about facts. Well, speaking of some data, this is some fascinating data courtesy of Prashant Gopal, one of our real estate reporters, and looking at missed rent payments by apartment tenants. Las Vegas and New Orleans leading the way. This is a knock-on effect of a lack of tourism.
Yeah, exactly. Here's some perspective. If you look at the U.S. overall, rent payments have remained relatively stable, with about 7.8% failing to pay in September, which is up about 1.5 percentage points from a year ago. All right, jump ahead to what Jason said. Vegas. In September, 10.6% of Vegas tenants missed a rent payment. That's up more than 4% from a year earlier. New Orleans, also heavily dependent on tourism, had the highest overall share of people not paying, and theirs was 12.9%. That was up from 8.6%. So, economies that were hit hard, and as you said, Jason, anywhere where there's areas that count largely on tourism, they're running into trouble.
Yeah, because, essentially what happens, not to belabor the point, but basically tourists aren't showing up, and it's casinos and restaurants and hotels and all those things. They're laying off workers, so people don't have a job. They can't pay their rent. And so it has this knock-on effect. It goes back to what we were talking about with Steve Matthews and college football teams. The idea that if you're not putting on these big games with tens of thousands of people coming to town, there's an economic effect to that.
Yeah, exactly. It's not just directly to the schools, right, and the teams, but it's also the surrounding, communities, whether it's restaurants, whether it's, bed and breakfast, whether it's hotels, and everybody feels the impact. And that's why, the economic and financial impact just grows exponentially. So, and this is why people get concerned, especially if there's not more aid coming, what will be the prolonged effect on our economy, because it is harder to bounce back once things go down. So something we're watching. All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. We're going to get back to Poppy McDonald of USA Facts.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A rebound for the U.S. stock market. The Dow, the S&P, and NASDAQ closing at or near highs of the day amid optimism that President Trump will be leaving the hospital. Also, lawmakers will move closer to providing more stimulus. Today, we saw the S&P 500 index advance by 60 points, up 1.8% to 3408. The Dow up 465, up 1.7%. NASDAQ up 257, a gain for NASDAQ of 2.3%. 10-year down 23/30 seconds. 10-year yield now 0.77%. Gold up 0.8%, up $14 the ounce at $19.14. West Texas Intermediate crude up 6.3%, $39.39 a barrel. Recapping S&P up 60, up 1.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Yes, indeed. Charlie, thank you so much. I want to get back to our guest, Poppy McDonald, president of USA Facts, also former president and chief operating officer of the news site Politico. She is with us on the phone from Seattle. Poppy, Jason and I, we knew you were coming on. We were both looking forward to it. And one of the things, especially after a weekend like we've had this weekend, where we realize really understanding a situation, having the facts about a situation, and I'm talking about the president having COVID and being in the hospital and there being conflicting reports, you understand, the value of real journalism and making sure the public knows what is going on. How do you make sense of kind of the environment we are in, this weekend et al.?
Yeah, a great question, Carol. And as I think about the importance of journalists, they're going out and getting the story, and they're breaking news, and they're interviewing people on both sides of an issue and providing that transparent information. And what USA Facts does is really provide the numbers and the data. So if you think about whether it's an issue like COVID or thinking about arming voters as they're looking to the 2020 election and thinking about who are the best people, they're going to an organization like Politico to hear what the candidates are saying. But at usafacts.org, we marry the candidates' positions next to the data about how the country is actually doing. And we do that by issue area. So we hope that voters can see what's the candidate's position, and does that jive with the numbers about what's actually happening with healthcare or with the environment? And am I seeing the kind of change I want, so that they can make the best decision based on the data, and also follow the data to hold the elected officials accountable and to advocate for that positive change that they want to see. So I think we're both doing really important work in the journalism side, as well as making that data accessible, and hopefully the data accessible to journalists too. You all move so incredibly quickly. We want to be a resource for the media, just like we want to be for citizens and for elected officials.
And so, Poppy, it feels like, if we look at the causes out there and to use a technical term, sort of the bugaboos that have gotten in our way, I mean, social media seems to have some role here, right? I mean, just the amplification of either falsehoods or opinions becoming just considered facts. How do you counter that, and how do you sort of prove to people that the facts do matter?
That's a great question. And it's really part of why we're trying to get this message out. We're doing this national campaign that's titled Change the Story. And the idea is that being on social media or following, the news media, you can start to feel a little disengaged. Can I change the story? Can I have an impact? I mean, the numbers right now feel really daunting. Over 200,000 people who've died from COVID-19, over 23 million people unemployed. Like, is there anything I can do? And our campaign right now, Change the Story, which will air again on Wednesday night, tied to the vice presidential debate. It's about being empowered to change a story and featuring real Americans who, through their own individual actions, are changing our story. So whether it's looking at a dedicated citizen who is going and voting despite the obstacles and trying to change that voting rate of 56%, or a doctor who's on the front line of COVID right now and is helping to change the story about the amount of people who are dying. Right. And so we really hope to give a hopeful, positive message to Americans. Go find the facts, feel empowered to kind of counter misinformation that you're seeing, whatever sources that you're looking at, and then go out and start driving that positive change, however you define it.
So, as someone who understands media and social media and facts as well as you do, what do you think needs to happen to sort of rein this in a little bit, especially as we get closer to an election where we know platforms like Facebook and Twitter and others are going to be, despite everyone's best efforts, rife with misinformation? Is it more regulation? Is it better policing, sort of self-regulation by the platforms? What's the best antidote to this in your estimation?
I hope the best antidote is that we can start with agreement on the facts, right? So whether you're turning on Bloomberg or MSNBC or Fox, or whether you're on Facebook or Twitter, and you're hearing people with completely opposing viewpoints, at least they start with agreement on the data. What are the facts? What are the numbers right now? And we may disagree on the right policy solutions to change that number or even where that should go. But like we should be seeing consistency in terms of the data.
Poppy, I have to jump in, and God, I wish we had like a half an hour with you but you understand, like, I mean, Jason and I both grew up in journalism where facts meant something, but I don't know whether it's social media. I don't know who to blame. But it just feels like facts aren't important. I find it when I have conversations about politics, when I have about the virus, like people just fling stuff out there like it is facts. How do you make sense of that? Like you guys at Politico understood, right? And we do at Bloomberg. Like facts are facts. Like we grew up in journalism where there was no wiggle room. A fact is a fact, and yet that has been thrown out the window. And I love that there's sites like you. I know my daughter who does debate, loves sites like this because this is where they go. But I just wonder, you have to be like, oh my God, how did we get here?
Yeah, I mean, I don't know if I wish I had all the answers, but in this, 24/7 news cycle where things are breaking quickly, making it easy to distinguish, what is real news and what are the facts versus what are people saying to further their own agenda. And it's confusing right now. It's confusing for Americans, and it's difficult to access those facts. So I'm hoping through more trusted journalism, through more research sources like usafacts.org, that we can counter it by putting the real information out there. And USA Facts tries to do that. I know you do too at Bloomberg, but trying to, when we're finding misinformation out there, just posting, hey, here are the facts.
Yeah.
And taking that on.
And so, Poppy, with something like a presidential debate or a vice presidential debate, do you think we should all be sort of fact-checking more in real time? Should that be better built into the system at this point, given that there is a disregard across the board, oftentimes?
Yes, I'm going to answer it. Yes, right, Poppy?
So Carol votes yes.
Yes, I mean, at usafacts.org, we do put out kind of real time on Twitter as